Good morning, distinguished ladies and gentlemen. Good morning. Okay, I think the energy is coming from this side of the hall and moving over here. Let's try again. Good morning. All right, so someone told me something. Thank you so much. Someone said something some time ago. The person said that entrepreneurs, particularly tech founders, startup founders, investors, and people in the tech ecosystem generally, someone said they're usually very reserved people. In fact, the words that the person used, I don't want to use it on the stage. They said they're very reserved. They don't like to talk to people. They don't like to mingle. But you know what? I defended you all, and I said that's not true. I know some of the most fun, most interesting, most dynamic people in the tech ecosystem, and they're here, right? So we're going to prove them right. I'd like you to please rise. Everyone, please rise. If you're online, then we want you to engage with us in the comment box. But everyone in here, please rise. All right. I want you to move a few steps and walk to someone you've never met before and say hello. Move a few steps, meet somebody you've never met before and say hello. I like that. Hello. As far as the stage. I knew that tech founders, investors, and people in the ecosystem are interesting. I mean, how can you say they're boring like this? How? Amazing. Get a contact. Introduce your startup. This could be your next big deal. This could be your next partner. If you're not networking, you're wrong. And if you're listening online, please drop a message. Tell us where you're joining in from. 1 minute more. 1 minute more, everyone. 1 minute. 1 minute. Networking continues. That could be your next partner. Amazing. All right. I hear it's 15 seconds more. 15 seconds more. Networking. It's a wrap. Amazing. Please, let's take our seat now. Thank you. A round of applause for yourselves. You're amazing. Who said tech people are not fun? That's not true. All right, please, let's get to our seat. Now, this is the difficult part where you try to break up the networking and pause it temporarily. Please, let's get to our seat. Amazing. The networking never ends, but we'll continue later. Please, let's get to our seats. Thank you. Thank you. Okay, we'll give you 15 seconds to sit down. The last person to sit would maybe buy us lunch. Amazing. All right, so you just proved them wrong, and you proved me right, that you are some of the most fun, some of the most innovative, most brilliant, dynamic people on earth. And it's such an honor for me to be here today, to be in your company. So ladies and gentlemen, good morning. Amazing. I like that energy right here. Good morning. It's such an honor to welcome you to this event. Welcome to the 4th edition of the Invest in the Future Summit. I thought the energy would be higher. It's the 4th edition. Let me brag a little. You know, the first edition was in New York. The second edition was in Lagos. The third one was in Nairobi, and we are back to Lagos. Please show us how it's done in Lagos now. Amazing. All right, so I would like to welcome you to this event. This event is an investor conference and a demo day organized by Accelerate Africa in partnership with Future Africa and Etana. My name is Temi Badru, and it's such an honor to be in your company and to be the compere for today. Now, the theme for this summit is building and funding African innovations to solve African problems. Building and funding African innovations to solve African problems. And just taking a look at the theme, one thing that came to mind is this African adage that says that he who wears the shoes knows where it pinches. And I think that adage should be she who wears the shoes. Because when you wear the stilettos, you know where it pinches. When you're putting on the 5 inches, am I right? I know the ladies will agree, right? We know where it pinches. And so just bring into context the fact that Africans understand the challenges, Africans understand the opportunities in Africa. And that's why we're having this conference today. So, coming up today, we'll have brilliant speakers who have agreed to share their thoughts on the different segments. We're going to have panel discussions. We're going to have fireside chats, fireside conversations. We'll have very insightful presentations. And of course, innovative pitches. I said pitches because I looked to that end because I know that we have some of the most brilliant startup founders in here who are going to be pitching. Let me take a moment to welcome our distinguished audience who are joining us online. Thank you for joining us. And we hope that as the conference goes on, as the summit goes on, you drop a message in the comment box. Let us know where you are joining in from. The beauty of technology is that you can join in from different parts of the world and we can connect together. Now, before we begin, ladies and gentlemen, let's run through some housekeeping just to ensure that we have a seamless event. In the case of a fire emergency, and you know, the Nigerian in me would say, God forbid. But in case of a fire emergency, we have 2 doors, one at the back of the hall and the other one behind the stage. They'll be open and you can use them if we have a fire emergency. Also, if you'd like to use the restroom, they are located after the lobby by the elevators. So if you'd like to use the restrooms, you can walk down through the entrance, exit at the back, and then go to the lobby. And just after the lobby, you see the restroom. If you have any questions, if you want to clarify anything, please speak to our ushers. One of our ushers is at the back. Can you wave? All right, she's putting on black and black. And then the ushers are outside at the registration point, happy to answer any questions that you have. Now, to maximize this event and to minimize distractions, would ask you, distinguished ladies and gentlemen, to please put your phones on silent. We want to ensure that we enjoy the event from start to finish. So please, sometimes we forget to put our phones on silent and suddenly, while the event is going on and is flying so high, you suddenly hear brrr from nowhere. So please, don't forget to put the phones on silent so that we can minimize distractions. Now, if you'd like to get a sense of the program, to know what is coming, kindly scan the QR code. Or if you'd like to get a sense of the program, use the URL that is going to be displayed. But first of all, for the program, scan the QR code, on the stage. There's a QR code here. You can just scan it if you want to get a sense of the program, what is coming at what time, when will the pitches come up. Please scan the QR code to get a sense of the program. As I mentioned earlier, one of the highlights of this summit are the innovative pitches from Africans. Today, I dare say that you will listen to some of the most mind-blowing presentations that you've heard before from Africans. And you don't want to miss out on any of that. So if you want to listen to and follow through, if you'd like to connect with some of the startup founders or see the full pitch decks, please, there's going to be a UR code that is going to be displayed on the screen to connect with them. Or rather, it's a URL. It's already here. accelerate.africa/login or accelerate.africa/register. That is if you haven't registered. If you've registered, you can just log in here and use the login details. So if you'd like to connect with the startup founders, if you'd like to book a one-to-one session, either virtually or physically, you can use this information. Again, for the program, the QR code. And if you'd like to connect with the startup founders who are going to be pitching, you can use the URL link. Now, without further ado, it's time for the welcome address. Ladies and gentlemen, we just established that people in this room who are representing the tech ecosystem are some of the most amazing, fun, enthusiastic people that you'll find on the continent. No, not on the continent, scratch that, in the world. So I'm going to ask you, as part of our housekeeping, can we agree to be very generous with our applause going forward? Do we agree? Okay. I like how that we put some action into our words. All right. All in favor of being generous with our applause, say aye. All against, say nay. Okay, the people that said nay, please mark their faces. All right, ladies and gentlemen, without further ado, please welcome to the stage for his opening address, the founding partner, Future Africa, and CEO, Accelerate Africa, Mr. Aboyeje. Round of applause.
Thank you. Thank you very much, Temi. Thank you so much. I was just joking that Temi has exclusive hosting rights for Lagos. But we're always very, very, very glad to have Temi in the building anytime we have this. So thank you, Temi, for hosting us today. First of all, I really, really want to thank everybody for being here. There are many, many, many places that many of the very busy people here, there are a lot of very quietly coded people here. You may not be seeing some of the usual suspects that are very loud, but there are a lot of people in this room. I don't want to embarrass them with specific introductions, but you will see them as they come up on stage. And these people are the people that really built this ecosystem. Upstairs, there's a big deal room, and for the last week, there's a lot of capital from all over the continent flying in. And it can very much seem like that's where value is created. No offense to them. But the truth is, everything that you see that makes Nigerian technology ecosystem what it is was built from the ground up by people who never imagined it would become this big, and didn't do it because it would become this big, but they did it because they felt it was something that needed to be done. And that's why this city continues to inspire me. This country continues to inspire me. These people continue to inspire me because they are the bedrock and an example of who we are as an ecosystem and why we build as an ecosystem. But as we think about the future of where we go from here, that's really at the core of our theme. I thought today in my welcome address, I wanted to just quickly talk through three big things that I think are so important for us to keep in mind, particularly for those of us on the screen. Welcome guys who are going to be listening to the pitches and the panels, which are every bit as entertaining as the pitches, because we have serious conversations here. But also for the wider community, right, where people who might watch this after, what is important for us to think about in these particular terms. And of course, the backdrop of this is the recent changes in our ecosystem, spoken or unspoken, right? A lot of people that we held on to as allies and friends have had a change of heart. A lot of people who met us here, right, have decided that they have new priorities. And also, where different new hands of friendship are being extended to us. And it is at this juncture that we need to start having some defining conversations so that the lessons of the last 10 years are not repeated over the next 10 years. And that's the thematic of a lot of the conversations that we're having today. And at the core of this is, we finally build for ourselves? Or are we going to continue to build for Silicon Valley? That is the core of the conversation we must have. And like I've said many times, I think the years that we have given Silicon Valley is enough. And at some point, just like our elders fought the good fight to make this country an independence country, and our parents fought the good fight to ensure that this is a country where the things that make this country run are owned by our people. You need to understand that is not the case in most of Africa. We have the baton now handed over to us as a new generation of people to make sure that technology is deployed not to solve Silicon Valley's capital allocation problem, but to solve our development problem. And as we step into this world, we have to start asking real questions, questions that we're going to explore today. And we have to start backing a different set of startups that we've perhaps not had the good fortune of building before now. And the questions we must ask is, how do we fund businesses that work for us? That's the first question we must ask. How do we fund our own businesses that actually work for us? Because the truth is, funding the 100th stripe of Africa doesn't work for us. We don't have Visa and MasterCard. So funding another stripe doesn't solve any of our problems. But you know what? We actually have a real challenge with figuring out how to ensure that every day when somebody creates value, they can capture a piece of it. And that's a different, more complicated conversation. So how do we build businesses that honor that reality? Right? How do we build from the ground up to solve our own problems? And that means we have to reimagine what a good idea is. Right? The idea that we have to surrender to apps and APIs in a country where most of our people can't even afford phones. And rather than give them the jobs to afford phones, we get more dollars, which we change to Naira, so they can buy phones. Or we give them more dollars changed to Naira, so they can absorb credit that they now use to bet. At the end of the day, Silicon Valley doesn't care because they make 2%. Whatever happens to the money. But you know who gets hurt? Founders get hurt because they chased the dream and wasted their lives. And now they have to claw back from that, psychologically, mentally, and financially. Reputations of capital get hurt because early angels get crammed down in this hand-me-down capital culture. And at the end of the day, all the dreams of a billion-dollar startup that actually puts money in their pocket so they can fund the next batch of billion-dollar startups remain unfulfilled and broken. The country gets hurt because we've got tons of dollars supposedly directed this way, but in reality, sitting in banks that may go down anytime, right? And exacerbating our exchange rate issues because people need to make an arbitrage. That's what our funding ecosystem, because it really isn't a financing ecosystem, it's just a funding ecosystem, has delivered so far. And we have to build something different from the ground up. And finally, who are we building for? That is the fundamental question that we must answer as a people, as an ecosystem, as a community. Who are we building for? Again, are we building for Silicon Valley and their investors? Are we building for DFIs and the interests that back them? Or are we building for the average man and woman on the street who technology can really change their life? Or because of some arcane rules about how much must be deployed and where it must be deployed and asset light or asset this or infrastructure being taboo and political risk that doesn't really exist. The person on the street only hears about technology, but they don't feel it. The promise of financial inclusion is something where billions of dollars move around, but they can't tell you that their life has significantly improved from 10 years ago when we started this journey. And that is an indictment on our community. Because the reason why we started to do this was because we said technology can change Africa. And so if the change isn't being felt by the people that we serve, then we shouldn't be here. But the final point I want to make today as you listen to these startups, for us at Future Africa, for us at Accelerate Africa, we're only in the business if it's going to serve the people, if it's going to serve the future. We're not interested in plain startup. We have no interest. We've done well enough, all of us, by the grace of God, for ourselves, that we never need to play startup again. If we're going to do this thing, this technology thing, by God, let us make sure this thing works for our people, or we shouldn't do it at all. And I hope that today, as you go through the pitches and you listen to the panels, you're coming up with your own ideas and your own convictions about how we change this game. Because 10 years from now, when we're having this conversation, the biggest game in town cannot be a bunch of VCs running around. That would just be sad. It has to be a country where prosperity and purpose is within everyone's reach. And we have technology to thank for that. Thank you.
Thank you so much, Mr. Inyabueji. You'd agree with me that he has set the tone for the discussion we'll be having today. And I could hear a lot of wow, as he spoke. And if anything, that was just to say that, yes, you've given us some things to think about and perhaps to discuss about today. Thank you so much. Ladies and gentlemen, we're now moving on to the first presentation for today. Our speaker, whose voice you've heard slightly, will be joining us virtually. His name is Charlie Robertson. He's a macro strategist and FIM and the founder of FIM Partners. Charlie, can you hear us? He'll be on stage now virtually. I mean, that's the beauty of technology, that we can connect with Charlie. Head of macro strategy, FIM Partners, author, time-traveling economist.
I am going to try and present some slides. Hopefully that's going to work for you. A quick rush through what Trump means for the continent, some of the global macro stories, a few of the structural challenges that we still face, and then finish on currencies and markets that I hope are helpful for you. Just to say if we just jump straight into Trump. By the way, I heard a rumor that he might be coming to Africa, so it all gets much more tense if that happens. So please try and deter him if you know any way of doing so, because when he gets interested in a place, it all gets very volatile. So the big story actually I want to start with is, if you can see the slide on the screen, but I'll talk from it just in case there's a problem. But basically it's looking at how developed markets and emerging markets are priced by markets over the last 50 years. And there's a red line, which when it's high is when people love emerging markets. And when it's very low, they really dislike it. And we're in the third time of the last 50 years where people are really disliking emerging markets. And unfortunately, Africa is like a beta on that. And so if people don't like emerging markets, we have no capital or very little capital coming to the continent. And that certainly was the case in the 80s. It was the case in the early 2000s. And it's been the case, as you'll know, for the last, it's been getting more difficult for the last 10 years. Now, I think we're about to turn. In fact, I think we probably have already turned. And that turn is led not by enthusiasm for emerging markets and Africa, not at first. It's led by disappointment about the US. So in the early 2000s, it was disappointment with US tech, with Amazon, with Google, with Microsoft. And we had the tech bubble deflating. Today, we've seen something of that with the Magnificent Seven. And now, more concern about the dollar, and even, for a little while in April, selling off of US treasuries. So this is a loss of confidence in the US as the great story that it has been for investors for the last 10 years. It tends to work in cycle with the dollar. So a weaker dollar then gives the emerging market world an easier ride. Currencies can be more stable, interest rates can fall, domestic demand can grow faster. Emerging markets and Africa start to grow more quickly than America, much more quickly, and you get this currency kicker. So I think we've probably bottomed, we've seen the worst, and it's going to get better and better to be investing now. So that's a cyclical story, and I think the next 5 to 10 years should be much better. What's Trump done recently? He's obviously thrown the tariff story around. The key point of this chart is that Africa's not, by far not, the most affected. The worst country to be hit was Lesotho. And in terms of exports to the US as a proportion of its economy. But there's many, many more, much more affected. And if we look at all of African countries, there's very few where exports are more than 2% of their GDP going to America. And even those exports, some of them are tariff-free. Gold, commodities, precious metals. So South Africa, for example, nearly half of its exports are not even affected by the tariffs that Trump's imposed. And today we're still at that 10% baseline. It could change in 3 months. But the point here is this isn't the worst thing for us to be worrying about. What we should be worrying about is the impact via China. You've probably seen this map of how exports to the US were more important for most countries in 2003. Today, every country on the continent, most important market is China, except for Eswatini and Lesotho. Now, for China, the IMF has just cut their forecasts to 4% growth. It's not great, but it's not the same damage that we'd be facing if America was the main export partner. Aid cuts. I know this is an issue which some people are saying there's an opportunity here for the continent to reduce its dependence on aid. Maybe so, but my view is that we had money coming to the continent and it was helpful. And in South Sudan, actually, essential is 15% of their GDP. For most of the rest of the continent, around 1%. That is a loss. We don't know how big a loss yet. I know a number of people in the aid world, and none of them could put a figure or an estimate on actually what the hit's going to be, but quite a lot of it. So that is a bit of a negative. And then we've got the third big story, which I think is oil. And what I was hearing in January was that Trump is determined to win the midterms. You know, if he wins so hugely, and he's always promising to win hugely, maybe he could win so much that he could change the Constitution and run forever as president. I mean, maybe that's the dream, I don't know. But what I heard was he does want oil in the 60s. And that's my base case. So unfortunately for Nigeria, say, or others like Angola, Gabon, this is going to make it a tougher year, and probably 2 years. So I think the Saudis are delivering that lower oil price he wants. I'm not too worried about it going much below $60. I think if there was a risk of US recession, weakening demand for oil, sending it down even lower, my guess is Saudi would cut output and help bring the oil price back up. But it does make it a bit more difficult for this next 2 years. And problematically for Angola and Nigeria, both countries have got elections going into 2027, so they want to spend. They're not going to have the oil money to do it unless Tinubu's reforms of the NNPC really make a difference. So what does this all mean for the global economy? Well, there's a lot more uncertainty. You'll have heard that from everyone. the key last 2 months has been US growth. It was expected to be 2.3% this year. It's now expected to be 1.4%. Not much better than Europe, UK, Japan, all weak. And China weaker too. So for growth, Africa has to look to itself. It's not going to come from the outside world, not in 2025 or probably 2026 either. Some good news from that, relative good news, is that if growth is weak, we ought to see bond yields coming down, borrowing costs going down, US interest rates going down. And economists and the Fed are both telling us 50 basis points of Fed cuts this year. The market's pricing more like nearly 4 rate cuts this year. So that benefit for Africa in terms of lessening our debt load is obviously helpful. And then the most helpful thing of all is the weak dollar. As I said at the beginning, when you get a weak dollar, people start to look at emerging markets and Africa in a more positive light. And we've seen an incredible sell-off in the dollar. In fact, the chart on the left-hand side, if you can see it, is a 50-year chart again, just on dollar-euro. I'd say we've been in this channel of strength for the dollar, going from 150 to the euro to almost through parity actually briefly, but we seem to be breaking out of that. We're breaking out in a weaker way, and I hope that's telling us that we are going to be in this next 5-10 years cyclical story, where it's going to be much, much easier for you to be making money. But it doesn't take away 3 challenges: education, electricity, and savings are, to me, the 3 core elements of what delivers countries out of poverty and into a much rosier future. The education story is good, so much better. You go back 60 years, I did some numbers the other day, actually. I think there was something like 25 million adults on the whole continent who could read and write. 4 words in any language is the definition of can you read and write. Farming is hard work is the sort of sentence that you need to be able to read or write, be counted as literate. We had 26 million or something here in 1960. Today it's 500 million. 500 million people who can now be out of the fields, working in industry, working in services, and delivering prosperity. So that's the most stunning change that I think anyone has seen for, well, Asia had a similar story, I guess, but this is, Africa's got the population it needs to be able to take off. What it hasn't got is the electricity it needs. So the grey in this map are countries with too little power. However, the industrial base, the countries have always needed to take off. There's always been a reliance on manufacturing to do this. Without power, you can't have the manufacturing. And the reason we have a power shortage is because of interest rates. Countries with low interest rates can fund infrastructure, electricity, roads, ports, and they don't have to get an instant return. It doesn't have to be a get-rich-quick story. You can afford to borrow for 10 or 20 years at a few percent. You can't do that when your interest rates are double-digit. And so the problem isn't an African problem, because we've got countries like Mauritius and Morocco with extremely low rates, like China or Vietnam. And we've got Asian countries like Pakistan. Same story as Sub-Sahara, much of Sub-Sahara. This isn't an African story of interest rates. This is something else. And what I discovered after 20 years in this job is the importance of demographics. And contrary to the consensus, which is that being young is great, what we actually find is that being a bit older, not as old as me, but a bit older, is good. when you've got big families, you're a young country. And when you've got a big family, you've got no cash on a Friday night to put into a bank. Bank deposits are low. If the bank's got no money, or very little, it charges a very high rate for you to borrow that money, whether you're the government, whether you're a business. So the big shift happens when family size drops to about 2 to 3 kids. This is when you get your India, your Morocco, your Indonesia, your Bangladesh success stories. So when are we going to see that? We saw it in Mauritius back in 1979. That's why Mauritius is the second richest country on the continent. We saw it in Morocco in 1999. That's why more cars are rolling off the assembly lines in Morocco today per person than off production lines in France. We've just seen it in Egypt. It should be a big success story, and we're going to see it in Kenya next, in Ghana, Ethiopia, Rwanda. For a number of other countries, we're 20 years away from the sort of smaller family sizes that will provide the big savings, the immense savings that will then power a takeoff. So what can we do? Well, we can leave, and people do leave. When the Europeans had high fertility, they had a lot of people in the continent. They didn't have many savings because they had high fertility. So they left. They left for America and Australia, South Africa. In the 1950s, it was the Irish and Turks to Germany. 1990s, it was Filipinos to Hong Kong. And today, it's Nigerians to Canada, Uganda to Dubai. There's a growth story here, which is also important to remember. What investors really like is very high per capita GDP growth. But when half your population are kids, they're not providing any GDP growth at all. They're not earning money. They're not paying taxes. They shouldn't be working. And when you've got 1 adult per kid, your per capita GDP growth is about 1.4%. When you've got 2.5 adults per child or pensioner, you grow at 4 or 5% per capita. That's what Asia has been doing for the last 20, 30 years. They've just got a higher share of the population working. So they grow faster per person. And that means the middle class grows faster. That attracts in investors. And they're doing it because they've got the savings. Because they haven't got many kids anymore. So you can see, you can actually track when the countries look their best. Countries like Korea, the orange line there shows you in Korea in 2015 or so, they reached their peak of 2.8 adults per kid or pensioner. And Korea was a great story. Not anymore. Now they're getting old and it's slowing down. It's Vietnam that's coming along and looking great. Philippines and China, kind of same story. China's already past its peak. Philippines is looking better and better. And then we can look at Indonesia versus Kenya. Why is it easier for investors to find capital to come to Indonesia? Because they've got 2.1 adults per kid right now. But Kenya's at 1.6. We look more like Korea in 1980, not Korea in 2020 or 2000 when it was doing the Samsung, exciting story with everything that Samsung, Daewoo, Hyundai were doing. We're not there yet. We're 20 years away from there yet. So the simplest way to sum that up is to look at your median age. If you're 18, 19 years old, you haven't got much cash. If you're in your 20s, that's when you can start to save. That's when life gets a bit easier. And into your 30s. And by the 40s, well, you've lost your youth, but your savings tend to be high and your wealth level tends to be high too. And this is true for countries as well as people. Do natural resources give us the savings we need? Not unless you live in a country with very few people. So if you're Botswana and you've got millions of diamonds and not very many millions of people, you can get rich. if you're Dubai, if you're Qatar, if you're Kuwait. But it's natural resources. Unfortunately, there's just not enough of them to make 1.5 billion people wealthy. The governments have turned around and said, okay, well, we'll go and borrow money then. And they've ramped up their debt levels to try and borrow money from abroad mostly, or a lot of it's from abroad. But we're kind of at the limit now with debt to GDP where we are. Many countries, not every country, but many countries are kind of at the limit of what they can borrow. So natural resources are not the solution. We've borrowed too much money to make that a viable story. What can happen to make a difference? And this is a really ugly chart, and I apologize. I blame an engineer colleague I used to work with, very smart man, just very hard to interpret his work. But what it's basically showing you is that if you live in a country with a small banking system, which all high fertility countries are, and you run a current account deficit, the money, the small amount of savings in your economy are leaving the economy through that current account deficit. And your interest rates, your real interest rates, the real cost of borrowing is the highest in the world. If you're poor, you are paying the highest interest rates in the world. It's so unfair. But only if you're running a current account deficit. If you're running a current account surplus, your real interest rates are zero. You're as well off as any rich country in terms of your real cost of borrowing. So there is something the authorities can do today to address that gap in savings. And this is why I come onto currencies. Because if we go back a couple of years, we had countries like Egypt or Ethiopia or Nigeria, where currencies were getting stronger and stronger and stronger in real terms, to the point where horrible current account deficits were created. Money was flowing out of their economies, and we just didn't see the investment we needed. And what's changed dramatically in the last 2 years, I mean, shockingly, if you're in Nigeria, I know that, but what's changed for the better is the currencies now are not 30, 40, 50% overvalued. They're close to fair value. This is another of my complicated tables. All I'm trying to emphasize in this is there are now currencies like Egypt, which is 25% cheap, Ghana, 10% cheap, Rwanda, 10% cheap, Tanzania, a couple of percent cheap. Most currencies now are around fair value or cheap. There's only a very few, Central African Republic, Mozambique, Cameroon, which look a bit expensive. So we should see some improvement on current accounts. We should see some reduction in interest rates, and that should help. That should help our economies. I promised to talk about a couple of things just on markets. Eurobonds have been recovering, the Eurobond price, so the markets are a bit more confident now on countries like Nigeria, Egypt. So there is a bit more positivity versus a couple of years ago. And elsewhere, Kenya, Zambia, it's all been fairly stable actually for the last year, despite Trump, until about a month ago anyway. It's only a couple of countries that the markets are very anxious about, Mozambique and Senegal at the moment. And I want to leave you with just a look at equities. And I use Nigeria as an example because you're there now, but I think, they're incredibly cheap. And yes, there's a lot of reasons for people to price a Nigerian share or a Kenyan share. It doesn't matter where on the continent. Morocco's a little bit doing relatively well actually, but everywhere else we've got very, very cheap equities, and it's just unlikely to continue like this. The valuations put on assets in Africa are too cheap because we've been in this run for the dollar, and everybody wanted to be in the US, and that story, I think, is over for the next 5 to 10 years. So I'm not promising that the whole economic story is going to be miraculous. We're not going to get the 3 to 5% per capita GDP growth of Asia. That's not likely. We don't. The population structure doesn't fit with that. But we are seeing good reforms in a number of places across the continent, and the mood music around the continent isn't going to turn tomorrow. It's not going to be, oh, everything's great on the continent. It's going to be, it's not as bad as we thought it was yesterday. And that gradually will turn into a more positive story. I would guess in about 2 to 3 years' time, you'll start to hear about a positive narrative. It's, we already have had 2 to 3 years of relative gains by then. So I'm going to stop there. Thank you very much for listening. I do hope you could hear all of that. And I'll stop presenting. Thank you.
Good afternoon, everybody. It's so nice to see you. My name is Mia. I'm Future Africa's managing partner, and really excited to have you guys all here. And Charlie, can you hear me? Perfect. Okay, great. So I'm going to kick us off with a few questions, and then I'm going to open up to the audience. So please get your questions ready. This is a unique chance to get even more insights out. So let me start with one thing. I'm a bit in a bind here, right? Because E tells me to always expect the worst, right? And it's a great thing, so we're always ready. But when I hear from you, I feel like I wonder if I can be slightly optimistic, right? So my questions to you is, so what we've heard is our equity markets are oversold, so they are very available at very low prices. Globally, equities are weak. The dollar is coming down. A lot of people have put their money into gold recently, which is a fundamentally non-productive asset. So global investors will look for returns again, right? So that's what I heard, if I can be cautiously optimistic. So Charlie, tell me a little bit more. How can we as the African continent attract some of this capital that will be looking for a new home after the disappointments they've now seen in the developed world?
It's been so difficult because people do look at performance and they say, how's the last 5 years been or the last 10 years been? And it's been very difficult to explain a positive story. If you're a private equity investor in the US, you could borrow, leverage up your fund at cheap interest rates. That hasn't been possible in Africa because the interest rates are so much higher. The performance has been tough for all the reasons I've talked about. But what I think, so I think at first, again, for the first year or two, you need to build up a little track record of good performance. Despite all of these headwinds, it becomes easier and easier each year that passes to attract that capital. You'll find it easier in 5 years' time than you will in 5 months' time. But this year, I think risk aversion and unwillingness to do anything is going to be a big problem for global capital this year. And this is why people are hiding in gold. But with this I think there's another aspect, which is the human capital improvement over the last 10 to 20 years. That it's not just literacy that's getting better. It's the number of people who've been through university, who've been through international universities, who've got work and experience abroad, who can now sell and explain the message, the investment message better. So if I was kind of I'd be trying to suggest you do roadshows in the next 6 to 12 months, probably more like 12, talking to investors and saying, you're not so happy about America right now, and are you really happy earning 0% interest or yield on your gold assets? Do you actually want to invest in a real business and make a difference? And I think in 12 months' time, people will be more receptive to that message.
Right, that makes a lot of sense. So short term, E is right. Long term, we're a bit more optimistic. So
exactly.
Let's talk a little bit about sort of Africa's role macroeconomically, right? You talked a little bit about sort of how other regions have gone on the industrialization path, created jobs, but it takes also a lot of infrastructure. And you highlighted sort of some gaps we currently have, be it on the electricity side. There's also a lot of fundamental infrastructure that's missing. Yet we don't necessarily have the funds to close these gaps, right? So we're, as Future Africa, Accelerate Africa, but also generally are looking more at what is our space in the digital economy, right? And how can we participate and get access to the global economy without necessarily all the infrastructure in place. And, we also have AI. We have a lot of young people that are digitally savvy. So how are you thinking about that, and how can we benefit from that opportunity?
Well, it's an excellent question, because I think you might be the thing which changes economic history forever, what you're talking about there, which is that up until now, and the book I wrote was called The Time Traveling Economist. I've gone back in time. It's always been the same story. Industry, manufacturing, starting with textiles. That's how countries take off. You get a few exceptions. Countries like Seychelles was lucky because it had a lot of beaches per capita that people wanted to visit. But in the main, services could not provide the means to boost your income, because you couldn't sell a service like, typically people talk about a haircut as a service, which I badly need. But but now we can. Whether it's accountancy, whether it's financial expertise, whether it's legal services, you can do this now. I can get secretarial support from somebody based anywhere in the world. And this, what's so special about this for Africa right now is that with that digitally savvy point you're making, you've literally got the young people who are just quicker and better than me at this. And it doesn't cost money on the infrastructure side. Not like it did, not compared to manufacturing. You build a factory, you need electricity, massive amounts of supply. You need roads, you need ports, maybe airports. For services, you just need that broadband line and a solar panel on your roof. That's relatively cheap. And since COVID, I wonder almost whether COVID's made a difference here. People have more confidence now about doing much more. I mean, I would never have tried to do this online 5 years ago. And now, I'm sorry I can't be with you. I know it's better, but it's possible. So what that's telling me is maybe we don't need to see this fertility decline that we've seen in the past in every other country, because we don't need the same store of savings. And you can be earning dollars and export money. Now, I've been talking to people about this, actually, the central banks and the IMF, and I'm saying, guys, are you seeing any sign that this service boom might be happening? Because what I see is remittance money shooting up. Now, I know that would come from the emigration we talked about, people going abroad to look for work, sure. But possibly it's also capturing a lot of services that are being sold, not necessarily being declared to the taxman, but the money's coming to the countries. And that could explain why remittances haven't just risen for 1 year after COVID. They've kept on rising, and they are rising and rising, and it's really a very exciting story. So I think the digital finance, all of it, all of the service space could be a complete game changer. And I hope it is, because it could tell me that we'll get better per capita GDP growth than anything I've forecast up till now.
Awesome, thank you so much. And that makes me even more excited about all the amazing startups we are about to see tackling a lot of these challenges. Any questions from the audience? Be bold. Yeah. Do you want to? I'll come there.
Thank you, Charlie. My question is around immigration. You touched on it slightly about people moving around the world. But again, there's a kind of diaspora community that's growing around the world also. What impact would that have on Africa ultimately from an economic point of view?
There's a loss of human capital, which I'm not going to deny, that the people leave, who get visas to green cards or whatever tend to be the better educated. They tend to be good, but we're only kind of losing 5 to 10%. That was what Norway, by the way, was losing in the 19th century when Norway didn't have oil yet, and they'd lost their big business, which was killing whales to find whale oil to fuel paraffin lamps. With that got out of date. They had no jobs. They all fled to America. We could see up to 5 to 10% of that demographic leaving, but they then create a skill set and a knowledge base. So many of the businesses I talk to looking at Africa are people who have left Africa and have set up in the States and are now wanting to do, or Europe, wanting to bring money back. So you're bringing that mix of skills and experience built up in other economies, plus some capital, and you're mixing it now with these young, smart people who have stayed in the country, which is most of them. And I think it could be very helpful. It can't fill the electricity infrastructure gap. That sum of savings isn't there for that, but it can certainly, I would have thought, give your businesses a great advantage.
Thanks so much. Any other question from the audience? Yeah, I knew it.
Thank you. My question is, when you think about this service loophole, right? Particularly in the age of AI, particularly with what is possible with AI, what do you think it will take for Africa to do to services what China did to manufacturing?
Probably people like you would be my guess. Well-educated, can express clearly across continents, even online. The AI thing has been a bit complicated. My first take on it 6 months ago was that it was capital intensive and it was electricity intensive. And that was going to suit countries like the Gulf, actually, which are trying to ride the AI wave. But then China came along with DeepSeek and suggested it might not be so electricity intensive either and could be a lot cheaper as a result, which suddenly democratizes it. So I think at this point, it's very hard to judge. What I think is important, the only thing I could tell you, which I think is useful, is when I looked at adult literacy, and I found the book in the London School of Economics library, which said you've got to have 70 to 80% adult literacy to take off. I wasn't looking for that subject when I was in the library. I was looking for a book to talk to me about how robots and 3D printing might destroy textiles manufacturing and ruin the chances for South Asia, India, Bangladesh, Pakistan to escape poverty. Because that's what people were telling me 10 years ago. It was a Kenyan guy who said, I'm worried that 3D printing, Kenyan civil servant, said, I'm worried about 3D printing ruining the chance for Africa to do in textiles what China's already done. And that hasn't happened. What's actually happened is that we've had millions and millions of textiles jobs created across South Asia, even with robots and 3D printing. And every technological advance we've seen in 250 years has cost some jobs. It has cost some jobs, but it's created millions of others that we didn't expect. So I can't tell you how AI will be harnessed by the continent. But if we have well-educated people coming out of universities, they will be able to use that tool. And this is where I think the continent has that chance, exactly to say, as you just suggested, to do with services what China did with manufacturing. But I also know that we just do not know what the jobs will be in 10 years' time.
Thank you so much, Charlie. Really amazing insights. What makes me very excited is that so many things we've heard, we will see in a moment our startups tackling, right? We heard currencies having been devalued, and guess what? We have a startup tackling this for middle class in emerging markets. We've heard the great opportunity in emerging market stock indices right now. And I'm sure most of you are thinking, maybe I should put a little bit of money in the stock market in Africa. And guess what? We have a startup that's going to help you with that, right? We talked about food inflation. We have a startup tackling this. We talked about high fertility rates, healthcare, and we have a startup tackling that, let alone all the services we're going to be selling from here to the world. So I'm very excited about that. Thanks so much, Charlie, again. We hope to see you soon again, and please keep us updated.
Was true. Thank you, Mia. Lovely to talk to you.
Same here. Bye-bye. Have a good day.
Thank you.
Thank you very much, Mia and Charlie. You know, Mia mentioned that we have startups who are tackling some of the challenges that have been addressed, and you're going to hear from the startups soon. But before that, we have a panel discussion, and this one is focused on building technology in the age of trade wars, tariffs, and Trumps. So, ladies and gentlemen, I'm going to invite the moderator and the panelists, and again, invite the audience to be very generous with the applause when I bring them up. All right. Okay, we'll take a minute to make sure that we have enough seats for them. All right. So, again, in that spirit of generosity with our applause, please welcome the moderator, Chinyere Inya. A round of applause, ladies and gentlemen. Partner, head of platform at Future Africa, and COO, Accelerate Africa. A round of applause. Okay. Next person, a panelist on this discussion, is the president and CEO, Upland Global Wireless Technology Limited, Dr. Bola Awobamishe. A round of applause. On this panel, we also have the co-founder, Rising Tide Africa, and CEO at Ekabela, Madam Yemi Kerry. A round of applause. We also have on this panel a collaborator-in-chief, TVC Labs, an investor, advisor, a philanthropist, Mr. Tommy Davies. Round of applause, ladies and gentlemen. Over to you, Chinyere.
Thank you. Let's give Tommy a round of applause as he comes up on stage. Awesome. So I'm really, really excited about this panel because we talk a lot about building revenue-generating, sustainable businesses in Africa. And personally, this is like a treasure trove of knowledge and information on stage. So again, we're going to be talking about what it takes to build from the ground up. These are people who really have an understanding of the local market context. They've built businesses in environments that are really challenging and difficult. And they've had to have a vision in mind in order to be able to build these businesses that they've built. So I'm excited to talk to them today. Let's get you mic'd up. There's no... Just share mics if we need to not make it too complicated. All right, so while you're getting mic'd up, let's start with the first question. So each of you in your respective areas, you've built businesses focusing a lot on digital transformation, but you've done it in an environment where there's low trust. You've done it through currency devaluations and changes. You've done it in a market environment, again, that's very challenging. Talk to us about one of the businesses that you've built and how you've been able to navigate these different challenges, low trust environment, challenges around currency. Talk to us a little bit about that, but talk to us about one of the businesses that you've built. So I'll start with you, Mr. Davies. Like which one? Pick one.
Sorry?
I said pick one of them. I know there's
Which
many.
one?
Yeah, pick any of them that you'd like to talk about.
Well, the thing is, I keep getting asked, we've got a world at economic war, essentially. What's Africa going to do? What's the advantage? We live disruption on a daily basis. And that is the fundamental of it. Because if you look at international coming in, I think my metaphor is very, very simple. Okay, if you parachute in, you don't know where the potholes are. That's the fundamental component of it, is understanding what is going on locally, because the intricacies and the complex nature of our environment means that unless, excuse my local language, unless you don't drink Lagos water, okay, you can't really understand, okay, why we behave certain ways. But the truth of the matter is, our innovation, okay, it's not born out of desire. It's essentially born out of desperation in some instances. And that's why I tell people most of the best ideas and everything, they're coming out of no NEPA, not out of pitch decks. Exactly. I trust that helps.
Thank you for that. Yemi?
What have I built?
You've built several businesses, right? So the question is, for a lot of the founders in the room, there are a lot of challenges that you face as you've built the different businesses. There are things like, right, currency devaluations, you're operating in a low trust environment, you're operating where people don't have as much to spend maybe as they used to.
I think it's important to understand that when you're building for the local nuances, and you are building to solve real problems that will make real impact. You're building for a society or a community, and that really is the crux of why you would build or innovate. And when you look at the environment in which you're building, it sort of tips off what is called your innovation, right? If you ask me, one of the toughest digital transformation that we have done, I would say we, because I had to call him to come in and help me, was in a terrain where there was nothing in technology, and where I was put in a position to run the digital transformation of a state government. And I didn't know anything about it. And so one of the things that you have to understand is understanding your environment, relying on your network, because even though you are building for a solution for a problem, you always have to do your fact finding and look at which area and where would I get help and leverage on my relationship. You have to understand the local nuances. These people did not understand. I'm talking about my state, Edo State government. And these people did not understand how to use, technology, right? To the point that we had to do a 5-year strategy, but we had to start almost immediately. So when you're building your solutions, also understand the people that you're building for. Don't project, I'm going to build an Uber for Surulere because there's no transport. Don't project. Try and understand really what you're doing. It was one of my most difficult, because also I was a woman in a male-dominated environment where in my state, the men are proud, and so this girl comes and is telling us what to do. And so if you want to relate it to what we're saying now, is that when you're building, we had to build for the future. And we had to do a lot of things in modulars, such that they are flexible enough So when you're looking at building, please build flexible, scalable solutions for the future that you can, for whatever is coming in the future. Thank you.
Thank you, Yemi. Dr. Bola, anything to add?
I can echo the same thing the other panelists have said, but I'll put it more in a more technical way. I'm an engineer, so it's a lot easier for me to look at it that way. I look at things as the basis for design. You start from there. You know, what's the basis to design whatever it is you're trying to do? And by investigating that, you will find out the different attributes of what you need to do. Say, for example, where I got started in Nigeria was in the oil and gas. Typically, petroleum engineers who go to the field to collect data. But a lot of locations where the oil fields are difficult to get to. They are challenging. And then when you add the insecurity around, it makes it even a lot more difficult. And having been a field engineer myself, you know, you tend not to actually go because a lot of the data don't change, you know, as much. So you tend to just, you know, add 0.1 here, 0.2 there, you know, hoping that there will be no problems. But this led me to think about how do you wirelessly collect the data, keeping in mind that there is not enough coverage, you know, for GSM and so on. So my focus then was to look for what I call the IoT, you know, Internet of Things, connectivity. And looking at your problem in that way, I think, you know, narrows your focus, you know, and trying to find, you know, what is applicable. And maybe even for your market, you know. So not so much, you know, my view, it's not so much looking for the money initially, but trying to solve specific problems. If the problems are useful, if your solutions are useful, then, you know, I think the commercial benefits will come. Thank you.
Thank you for that. So he was one of the first people to bring machine-to-machine networks to Nigeria. And really what he's describing is it's a lot of the sensors, take oil and gas for an example, where it monitors remotely. You don't have to physically send people to check for leaks and check for issues. And one of the things I wanted to ask you about was around market timing. Being the first to do something means the timing really has to work out in your favor in order for it to be successful. So just talk to us a little bit about, at that time, what was the macroeconomic environment like? What led you to building machine-to-machine networks in Nigeria? And tell us about some of the challenges with doing that, being the first.
The biggest challenge is, you know, believability. You know, people do not believe you can do it. And also, engineers in our profession are conservative. So if it ain't broke, don't fix it. People are comfortable with the environment they are used to. And also the business for those who collect data, you know, the Halliburtons and the Schlumberger, it's not so much in their business interest, you know, to have a wireless, you know, machine-to-machine data collection. So you have to navigate through all of those, you know, and convince people, you know, that this is possible. My background happens to be, I'm a control engineer and, you know, been doing a lot of modeling. But without data, then you run into the same issues. So this is part of what drove me to, you know, looking at the machine-to-machine, you know, communication. But it's not easy. But if you are able to demonstrate that it works, I think you will get a lot of people that will buy in.
Thank you for that. So over to you, Tomi. You've, you know, from Huh? TD it is. TD it is. Okay, so from building Streaker Entertainment, right, to your investment firm Zytec, to leading ABAN, Africa Business Angel Network, to the Lagos Angel Network, and now TVC Innovation Labs, where he works with entrepreneurs and founders. Talk to us a bit about, you've really honestly seen the innovation value chain. You've really built around the innovation value chain. Talk to us about some of the characteristics of founders and entrepreneurs that have succeeded, right, in their businesses. Talk to us a little bit about that.
Okay, I think the easiest thing about that, or the best thing, is to bring it to life with actual characters. Okay, and let me see if I can thumbnail sketch each of these individuals. I call them my 6 sons, by the way, and they're well documented, okay? Let me take the first one, all right? This gentleman lost his mother to smoke inhalation. He's an engineer by training. What did he decide to do? He decided, well, other mothers shouldn't have to die of smoke inhalation. So what am I going to do? I'm going to build a cooking stove that's smoke-free. He built a smoke-free cooking stove, but beyond that, that cooking stove uses pellets that are carbon positive from waste. So what's happening? Well, now bottom of the pyramid women can get cooking stoves at a fraction of what it costs to make. And more importantly, because each of the stoves not only has a GPS system built into it and a solar unit, it means he can track carbon usage. So all of a sudden, we've got bottom of the pyramid women benefiting from smoke-free, while the people in the West are paying, okay, for producing smoke. So it balances out. To me, that was innovation. I met him in 2016 on stage with a diagram of the cooking stove. Today, that company is making more than 40,000 stoves a month in Abuja and exporting to all of West Africa. He was driven by his mother's death. That's quite powerful. I'll pick another one. And this particular gentleman just closed a Series A $20 million round on Monday. When I met him, he was running an amazing bulletin board that got up to 3 million users. But we couldn't figure out how to make money of it. So he had to shut it down. And most people would walk away from such a person after that. You failed, you took my money, it's all gone. He came back about 18 months, a year later, says, I think I can build something from what we've learned from the failure. They started in 2019. Today, they're doing over $180,000 a month here in Nigeria. Omni Retail. Now, the third gentleman came in as an arbiter. What happened? 2 guys had founded an amazing outfit that was going to tell the African story. One was a lawyer, one was a doctor, but they couldn't get along. Eventually, one of them hightailed it and the company was going down. And as an investor, I said, hey, what's happening to your numbers? By the way, where's your co-founder? After the second month, we discovered what had really happened. Okay, guys, here's what's going to happen. Both of you find somebody to replace you. And they came up with this gentleman. Today, you may know that company is called Big Cabal Media. Tech Cabal, Zikoko. And you see what Tomiwa has done with that company. Now, at the risk of time, I'm not going to share the others, okay? But you can look it up. It's on Medium. The point being, what do they have in common? First, a vision. They know where they want to go, okay? Because if you don't know where you're going, then any road will get you there. Because you don't have a big yes. You won't know what you're going to say no to. But if you do, you smile politely and tell them, I'm sorry, thanks, but no, thank you. And that's the critical component, is having that vision first. Once you have that vision, the next thing is to understand the nature of the problem solution set, as was being said earlier. What problem are you solving? And who is it really for? Are there enough people that have this problem and value the solution? Critical thing being, yeah, you can have a solution and I like it, but do I value it enough to say, yes, I will pay for it? More importantly, if you withdraw it, I'll have a challenge with it. And it's that replaceability most people don't go for. We have customers. But how retainable are those customers? And that's what you need to focus on, the problem set. I could go on about teams and the economics of it all, but I won't bore you with those details.
No, not boring at all. Not boring at all. I mean, I think that those are the characteristics of true builders, and a lot of them are in this room, right? To his point, you have to have a vision in mind of a future that people can't necessarily see. That is the thing that drives you. But the thing that has to underpin that is the local market context and understanding, which is what they keep repeating. But you also have to have a level of resilience to deal with the difficulties, because they will come. So thank you for that. On to another innovation powerhouse, Yemi. So Hacker Bella is your consulting firm. You also create a lot of products through that. You have your HR product, the healthcare management system. You have your people solution. You've done work, as you mentioned earlier, around BitPOS and Delta State. And now you're helping companies focus on building AI solutions. So talk to us a bit about your process, because what you've been able to do is repeatedly identify problems and match the most appropriate solution that fits the local context. So talk to us more about your process. You can spend time on the actual businesses too, but there's something there that you're doing right because you're able to do it repeatedly. So talk to us about that process.
The process of the new products stemmed out of the failure of the initial one we were going to do. During the COVID, I realized that it was very important for me to have a product that will solve problems for a lot of organizations that were coming to us. And because my background was from ERP, I thought that would be the best one that would solve a lot of problems for businesses. And I started off to build an ERP solution. And guess what? I started with the wrong setup. I started with the CRM. I began to project, right? Today, the CRM is a failure. I just can't get it to market, right? And so I understood that instead of projecting, I needed to understand what was the requirements and what was the most frequent issue in the sectors. One was people in almost all companies, and the second in the healthcare sector was really a management solution. You would find people sit down and we had to do a lot of study going from hospital to hospital to try and understand why are people always queuing. And one of the critical things that we found out was that it was just really the front desk. You know, just getting past that front desk and then doing your vitals would take some people a long time, 45 minutes to sometimes 2 hours, right? And so we knew that we had a problem to solve for. So one of the critical things that you do is really to dig down deep and say, what is the solution and the issue that is most common that you're facing? This is if you want to provide a solution for a community or a sector or an industry. After doing that is to see whether really are they going to be able to use it. So you provide a solution for a smartphone for people in the bottom of the pyramid. You've just missed your mark, right? Because a lot of people in the bottom of the pyramid are not using smartphones. What they're using is ordinary, I don't know, those phones. And so you have to identify what they will use to interact with your solution. Now, believe you me, doctors are not the best people that want to use. They just want to solve a problem. And so you have to find out what is the best way in which I will make sure that these doctors and nurses want to scribe onto the application. So for your users, you must really get into the shoes of the users and almost get into the minds of the users for you to make sure that there's product market fit for your product. And then you now start to think, even though I have identified an issue and I have seen that the users are there, what is it that will make them stick to mine? Right? Because you're building something and you must be different from all others, right? And so what is that your value proposition that you are going to say, a tumbler is a tumbler is a tumbler, but when they see all these tumblers on the shelf, they pick out mine, and you must be able to build that in it. And identifying that is the core of your innovation. That means you're making something that is usually there, but you're making it in a different manner. Right? And it's that innovation that tips your product into the market. So that is how I've gone. You talk about process of how I build the solutions, and that is what I've done, on a consistent basis in building. Even for clients that come and say, I need a solution to solve this problem. You go into their business and try and, do your requirements gathering very well. You see, the planning of your application may take 8 months, but when you get it right, it goes straight to the market.
No, it's brilliant. So what I'm hearing from that really is fail forward. Because she started out telling you that she failed before now finding a solution that actually fits. So fail forward. You continue to innovate, almost obsessed with your customer. We talked to our founders about that a lot too. A slight obsession with understanding them very well, because the deeper you understand your customer, the better you can help to solve their problems. So one more question, and then I'll have a final, is just around research-led innovation. And so with you chairing LASRIC, and also the work that you've done with machine-to-machine networks and through your consulting organization, how do you guys leverage research in the businesses that you're building? So we want to focus more, talk more to founders about leveraging research, data, analytics, insights, information, right, as you build. So maybe start with you, TD, given that you're chairing LASRIC and you connect that to the entrepreneurs that you're working with. So talk to us a little bit about how you focus on research-led innovation. Then Yemi will go to you, and then we'll end with you, Dr. Bola, and then one final question.
Okay, I think first and foremost is just take research for granted, okay? You heard about tools, everybody's talking about ChatGPT, Google, and what have you. The advantage AI has brought to us is everybody knows what everybody knows. That's the fundamental advantage. So you don't have an excuse anymore for not even doing basic research. But more importantly is, what are you researching? Because research is a technique. It's taking out what should you really, really research. First thing you need to know with your research is market. What's really happening in your market? How big is it? How small is it? What are the trends? Who's the competition? What kind of dynamics are happening in terms of trends? And what about compliance requirements? Those are fundamental things you need to know. So first, understand your market. Second, your customers. If you don't, you need, I think it was Steve Jobs that says, you need to know your best customers better than they know themselves. Okay? Why? People talk about conversion. If you don't understand customers, how are you going to convert them? Fundamental understanding. Third, final, your product itself. Research it, understand it, and know exactly what it can and cannot do, why it will and won't do that. Now, in terms of where to go for research, there's basic research available online, but don't forget, we also have academic institutions that are thinking and discovering things that, unless you ask, they're not going to tell you. And you'll be shocked when you ask at how much they throw at you in terms of the response, because not enough people ask them. I trust that helps.
That helps. Dr. Bola, Yemi, anything to add to that around research-led innovation? Anything to add?
Yeah, what I will add is that you should also pay attention to collateral benefits of what you're doing. because it's not always the solution you are after that actually generates the best benefits in terms of products. So you could actually, I'll give a quick example. Years back, we're looking into how much a vessel engine will, how much do they use fuel? And we ended up, doing some thermodynamics equations and so on. But the product that came out of it was something that was used to monitor theft of diesel. So vessels go out and the captains, siphon off the diesel. But that product came out of trying to monitor how an engine is actually burning fuel. And that became even a bigger product than what we started from. So sometimes just having an open mind that your research should go beyond just the narrow focus you are on could end up being, most beneficial.
Excellent. Okay, last question, and then we can get up. These folks, like I said, have been around decades building innovations across the continent and beyond. So, in the most, in the most positive way, decades, in the most positive way. 5 to 10 years out, give us one fundamental shift that you're watching or that you anticipate is going to significantly impact our market, and how should we think about it, or how should we capitalize on that? So one fundamental shift, 5 to 10 years out.
It's not 5 to 10 years out, it's here. And we don't know what it's going to be. We don't know how it's going to affect us. We really don't know what this avalanche of artificial intelligence is. And it's not something we can predict. We can't even predict it. And so it is something that I think everybody needs to watch, and watch very carefully. Robinson said, we don't know what the future of work is. And so because we cannot even plan for the future of work. And so you need to be able to, even if you don't, everybody talking about ChatGPT, even if you don't know anything about it, please try and understand as it will affect you, or as it affects you today. Because, I don't know, it's a monster that I have no idea what it will do.
Yes. TD, Dr. Bull, anything to add to that? 5 to 10 years out, what should we be watching? We know we've got to watch AI, but anything else that we should be watching?
I don't know what y'all want to be watching, but for me, I expect that digital twins manifesting as avatars will become bog standard, just like email addresses are today. Okay, you will be sending your digital twin on errands. Okay, you'll be sending it to do things for you within the digital world in ways that people can't even begin to conceptualize today. That's my expectation of what will be happening.
A digital twin coming near you soon. Okay. Dr. Bulla.
I expect production to be quicker. There are things now like service on a chip that I expect would significantly, reduce production and actually enable developing countries like Nigeria to actually skip a stage, just like we were able to skip landlines, wireless. Service on a chip would ensure that, electronics production environments like ours, become a lot.
Excellent. Again, in summary, 3 things that I'm really taking away from this. You have to have a vision in mind that you're building after, right? And that's the thing that you're selling people on, is that vision that you have in mind. It allows you to navigate the different challenges that you will face, because there will be plenty of challenges that you will face on that journey. And you really have to be deep on the local context that you're building for and understand your customers well. Please join me in thanking Dr. Bola, Yemi, and TD for joining us today.
Thank you very much. Please, a round of applause for them, ladies and gentlemen. You know, I always joke that the moderator gets everyone to clap for the panelists, but she or he hardly gets people to clap for them. So please, a round of applause for Chinyere for moderating that discussion. Amazing. All right, so we're moving on to the next segment, which is the startup pitches. Amazing. That feels like what we've been waiting for, right? So we've divided the startup pitches into two segments, one before lunch and another one after lunch. So that's just a reminder that don't go anywhere after this because there's much more coming. You know, there's a popular expression or a popular saying in Nigeria specifically that the bottom part of the jollof rice is the sweetest. Have you heard that before? Has anybody really tried it? The bottom part of the jollof rice, the under of the pot, they say it's the sweetest, right? I know that we'll still have any Ghanaians here. Any Ghanaians here? All right. Okay, I was going to say that we're going to still have a discussion about whose jollof rice is sweeter. But either way, I'm just saying that as the sessions go on, they become much more interesting and you glean much more perspectives from them. So, to invite the first set of people who are going to be pitching, please welcome to the stage Mr. Moses Sule. A round of applause.
I think this is the moment we've been waiting for.
Yes.
12 solid weeks of preparation, 12 solid weeks of refining our products. And we're going to be seeing the finest minds today. Please, let's give a warm round of applause to our founders. To kickstart for us, we have Humphrey. Humphrey is coming all the way from Nairobi, Kenya. One of the coolest guys in the room. Humphrey is the founder and CEO of MyStocks Africa. MyStocks is enabling global access to African stocks and bond market. Please, let's join me. Give a warm Accelerate Africa welcome to Humphrey.
My name is Humphrey, and I have a very, very big secret. Last year, the Ghanaian index did over 56%, while the S&P 500 from the US only did 23%. The second big secret is this. There are over 100 million retail investors in Africa. We tried to invest in an IPO last year, and I'm from Kenya, my co-founder is from Botswana, and the IPO was in South Africa. It took us over 6 weeks to get a brokerage account, and by the time we got our brokerage account, the IPO was over, and we missed this golden opportunity. So we ask ourselves, why are Africans not investing in our own capital markets? And we found out that our markets are too fragmented and too siloed. And that is how we built MyStocks Africa. We are integrating multiple stock exchanges into one application. And no matter where you are in the world, you can buy African stocks, African bonds at the comfort of your own phone, no matter where you are in the world.
The food is so good, you have to eat it twice. My name is Humphrey. I'm CEO of MyStocks Africa. So, I'm going to share with you 3 secrets. Charlie hinted at the first one. Africa's capital markets are too cheap right now. The dollar valuations are too low, and if you're an astute investor, this is the best time to put money in African stock markets. The JSE in Ghana, up over 56%, NGX 37%, and this year, for obvious reasons, the S&P is down over 5%. Sorry about that. What does this mean? The second secret is this. There are over 100 million retail investors in Africa and over 50 million investors in the diaspora looking for yield, where to put in their dollars. And the best place to put their dollars is actually in Africa's public markets and bond markets. The third amazing secret is this. Regardless of the situation, Africa's capital markets are growing at an annual rate of 10 to 15%. Our assets under management as a continent is just $1 trillion, which is a tiny percentage of the global market. So what is the problem? Our markets are too fragmented and too siloed. This makes the ability to access investment opportunities face extreme friction and bottlenecks. And that is why we have built MyStocks Africa. With this application, no matter where you are in the world, you can invest in African stocks, bonds, funds, and IPOs. For our institutional investors, we built an operating system that you can access multiple markets using our AI. How did we do this? We've integrated the top 5 major indexes. At the end of the year, we will integrate the Egyptian, Tunisian, and Moroccan capital markets into the application. Our traction is quite good. Already we have a demand pipeline of over $70 million in funds. And our retail market is actually exploding in numbers from all over the continent. Ladies and gentlemen, this is a multi-billion-dollar opportunity. Imagine funds from the US, investment banks, trading firms, family offices looking to invest in Africa. We predict that in the next 1 year, in the next 4 years, 1 out of every 4 trades will happen on our platform, and 1 out of every 6 bond trade will be on MyStocks Africa. My background is in finance. I was part of the founding team of the East Africa Commodities Exchange. My co-founder is a financial markets operator, and we are coached by the best person in the world in African technology, Mr. E. If you really want to get in and the train is about to leave, you can buy your tickets at Future Africa. Thank you.
It can only get better from this point onwards. The next person that is coming to the podium is Bubola Ojo, who is the co-founder of Recital. Recital, it helps companies make sense of their transaction for money. Please give a warm welcome to Bubola.
When I was much younger, I'd always had a strong interest in building different solutions, expressing different ideas in different forms. I had a slightly epileptic educational background, but that was more of fuel for me to get into building businesses, solving problems in different forms. So the first problem I had to solve was mine. How do I transition? How do I function in the world when I have an epileptic educational background, from junior secondary school, senior secondary school, as well as tertiary education. So I got into the workforce pretty early, but before getting into the workforce, I'd already built and designed 2 different business models, based off of 2 different ideas that I had just when I was about 15. Whilst I had these challenges, they were also experiences that shaped me in very dynamic ways. I connected with my co-founder on YC Founders Connect. We got off pretty quickly talking about the problem of financial operations and the clear challenge that organizations have with running efficiently, how they process customer payments, the impact that has on the business, and how one day of not properly managing the processes behind how they manage customer payments could literally kill them, regardless of how big they are. The bigger they are, the bigger the problem was. We got together very quickly and decided to build Recital into what it is today. Hi, my name is Bubola Ojo. I'm one of the co-founders of Recital.
Behind the scene,
Okay. But behind the scene, it's not the same case. That payment goes through a very complicated process. For businesses, it's sometimes hard to track, it's hard to manage. They collect payments from different sources, different payment providers, different banks, in different forms, in different currencies. Now, what that means is that for their finance and operations teams, they have to sit down manually with Excel to try and make sense of that money. They need to find out what came in, if it matches what they expected, what is missing, and in what currency it came in. The impact of this is that transactions go missing, it slows operations, revenue is lost, and sometimes fraud also seeps in and out. Now, before I talk about why we built Recital, the key question here is, who are these companies that have this problem? There are startups, there are fintechs, there are enterprises, there are marketplaces, and even banks, your banks that you're using today. They still deal with this by hand. And that's why we built Recital. What we do today with Recital is we automate the operations behind their financial processes. And what that allows us to do is we're able to reconcile their payments, give them cash visibility across all their financial systems, a real-time monitor of their transaction flow, showing them where payments come in from. We're able to automatically resolve chargeback fraud. On top of that, give them forecasts and a lot more. We're able to do all of this without having to touch the money or change how they operate. Today, we reduce the time they lose on a daily basis or on a monthly basis by over 98%. That's an impact of 33 times. On top of that, we're able to reconcile over 1 million transactions in less than 5 minutes across any financial system combined. The big question to ask is this: why has this problem not been solved? Why can you easily make payments? It's instant, but the process behind that is still flawed. It's simple. There are hundreds of financial systems globally, different banks, different payment providers. They don't speak the same language. They don't have the same data structures. And that's why teams have to do it by hand. What we've done today is we've connected over 5,000 financial and payment platforms together in real time. And what that allows us to do is to solve all of these problems from start to finish. If you'd like to join us, please speak to me afterwards. But here's one thing to note. We've built Recital for startups and for enterprises, and Recital is for the global market. Thank you very much.
Well done. Well done, Bobola. Thank you. I think we can do better than what we just did. Well done. Well done.
Hi.
Just because we have a tech brew coming in, and so the tech brew, the next person that is coming on stage, Sam Obi. Sam is the founder and CEO of Simplified IQ. At Simplify, make it easy, the easiest way to create and grade tests automatically. Please, let's welcome Sam to the podium.
Upbringing for me was kind of interesting because I saw things happen with my older siblings. I always observed and then I learned quickly, I learned faster. Today, I'm a designer and I've been designing for almost 20 years. It's been quite a journey because I have a background in education, hence Simplified IQ. That has put me in a position to combine the technology experience I have today and my background in education to build a solution that would solve a very big pain point in the education industry. When I was in the university, I wasn't having good grades. I didn't know what that meant until later on, a few years ago. I had this one professor that, kept telling me, hey, you need to read more, you need to study more, you need to do all these things so that you can have better grades. And building Simplified IQ made me understand that it wasn't about the grades, it was about the assessment. If we're able to automate the entire assessment process, they'll have their time back and they'll be able to teach. They'll be able to do better. So for somebody like me, knowing that there's something like Simplified IQ out there, it'll help other teachers, it'll help people focus more on the aspect of teaching and ensuring that students do better, then they know that the assessment part has been taken care of by Simplified IQ. My name is Sam Obi, and I'm the founder of Simplified IQ.
Ladies and gentlemen, what you didn't see in that video is the fact that I had to teach for some time. So I understand the pain of teachers because they have passion to teach. They want to engage with students. They want the students to do great. But then there's exam. Everything that happens behind the scene is extremely manual. It's a pain and it causes a lot of problems. Today, examination processes from start to finish is a ton of manual work. Moving into a next level, looking at chartered institutes, looking at examination bodies, looking at other professional certification exams. From the moment you have to set questions, looking at all the overused past questions, to the point where you have to manually monitor all these students. Now, after the exam is the hardest part, grading. You have to grade exams manually. It makes the turnaround time go from weeks even into months. What we have done in Simplified IQ is change the game and automate all the processes of exam from the beginning to the end. We have done that in 3 ways. Everybody say 3. Say 3. 1, we generate questions automatically, unique and tailored to whatever they have taught. Secondly, we have implemented monitoring, digital monitoring, that helps you ensure that malpractice is being reduced to the barest minimum. Thirdly, we have automated all types of grading. To put that into perspective, we have onboarded one of the biggest chartered institutes in Nigeria, Chartered Institute of Project Managers of Nigeria. Before Simplified IQ, their entire process was manual. Today, they are able to take multiple exams concurrently and at large scale. Recently, the federal government asked some of the biggest secondary school examination bodies to transfer from the manual process into online-based testing. Imagine Simplified IQ doing that and making their lives easy. If we get a fraction of those chartered institutes, we have about 80 plus in Nigeria alone. That will bring us to almost $3.5 million with our simple business revenue, which is charging each candidate per exam. In the end, last year, they had 3 million secondary school candidates take these national exams, the WAEC exams. If we support that and make life easy for them, they will do better and life will be easy. There is no better time than now. Digitization is inevitable. To learn more, let's speak quickly when we talk outside. Thank you very much.
Bravo! Well done, Sam. Well done. I think we should give Sam another applause. Well done. The next person that is coming on stage, we will confirm towards the end if he is human or an AI agent. Tommy Singh Generola is the founder and CEO of Swarm Zero. Swarm Zero allows enterprises to turn any painful workflow into fast, autonomous AI flow. Please make a warm welcome to Tommy Singh.
I grew up in Ibadan and eventually moved to Lagos, where I did my primary school and finished secondary school. During that time, I quickly saw how the gap in access to technology helped me stand out from a lot of my peers. On a larger scale, that's happening today with artificial intelligence and across different industries. A lot of the banks, no matter how hard they try, they're not able to handle the high demand in customer complaints. There's a lot of paperwork, there's a lot of manual effort, a lot of errors, multiple verification steps, and this leads the banks to have up to 95 days, months trying to resolve an issue that globally the standard for those resolution times is just 15 days maximum, sometimes 5. What SwarmZero is doing is we're providing banks with artificial intelligence agents called AI agents, which are able to optimize their internal operations. So they can handle those issues much faster, with much more transparency and cheaper, and those banks can now serve their customers much better. And as we know here in Africa, every minute counts. I'm Thomas Njenrela, founder of SwarmZero, and we save Pan-African banks millions in operational inefficiency by using artificial intelligence.
Hello everyone, I'm Thomas Njenrela, and I've spent the last decade in North America building software for large enterprises and even working on enterprise AI at companies like PayPal, NASDAQ, ChainML, and Avast SecureKey. During my enterprise AI journey, I observed that there's still a massive untapped opportunity for artificial intelligence in the enterprise. Studies show that on average, 60% of a working day is lost to busy work. These are the repetitive manual tasks. At scale, that means businesses are losing time and money. However, today there is a new catalyst for productivity: artificial intelligence. We've all seen and heard the explosion of AI tools like ChatGPT, DeepSeek, and more, but enterprises still have not been able to unlock the value that was promised. SwarmZero is the game changer. What we do is ensure that enterprise customer data is handled sensitively and is protected safely. We also make sure that enterprises are able to use any AI model of their choice, preventing vendor lock-in. And we make it easy and seamless for enterprises to integrate any of their existing systems to powerful AI. As an example, we identified that $45 billion is lost annually by Pan-African banks due to inefficient internal operations. So what we did was to build an AI agent for a very specific use case: payments reversals. What happens now is that banks can use these AI agents to proactively reverse and recover transactions due to incorrect debits on customers' accounts. That means the customers don't have to stand in line at the bank, and the banks can save themselves weeks of paperwork. The market opportunity alone for Pan-African banks with artificial intelligence is $31 billion. And we're currently in discussion about pilots with Pan-African banks. So we offer two things. The first is the tools that enterprises can use to build their own AI agents that can maximize productivity without having to write code. Secondly, we also ensure we partner with enterprises to actually build artificial intelligence services that are tailored to their needs. As of today, our AI agent tools are in demand, and we have 500 employees around the world waiting to use them. SwarmZero helps enterprises achieve more, and I'm happy to announce that we've opened up limited slots for enterprises who want custom AI services built for them. If you'd like to learn more, let's have a chat later. Thank you.
Okay. Are you ready for the next one? What's happening? We've had so much. We're like, which one am I investing in? Let's go again. Are you ready for the next one? Okay, we're going to move on to the next set of pitches. We have 5 more to go. But first of all, food for the belly. Let's get some lunch. Before that, if you've heard them and you want to be a part of what they're doing, you want to invest, or maybe you want to make further inquiries, you want to ask questions, you want to see the pitch decks, so you want to get some more information, please click on the link on the screen. accelerate.africa/login if you already have registered, or if you haven't registered, there's another one by that part of the screen, accelerate.africa/register. So if you want to connect with them, you can book a session, schedule a session with any of the startup founders and have a one-on-one session or even a virtual session to see what is possible. You know, at the beginning of this summit, we had a lot of networking, and something I said was that partnerships just could be born out of this kind of conferences, you know, and this is why we're here. There's so much that can happen. So please click on the link on the screen, get in touch with them, book a one-to-one session. If you need some clarity or perhaps more information, this is the moment to do that. So we'll break for lunch, and when we come back, you're going to listen to some of the most brilliant ideas that you've heard come out of Africa. So we'll break for lunch, it's about 30 minutes, and then we come back. 30 minutes lunch is going to be served here, so you can just go pick up your lunch and then sit, network, but then this networking is a microwave networking. We want to keep it short so that in 30 minutes we're back. Thank you for staying with us. All right, so it's a good place to bring up the next set of founders who are going to be pitching. But before that, let me quickly remind you that you can access the investor portal when you click on the link that is here. The URL is on the screen, accelerate.africa/login, and then put in the details. Or if you haven't registered yet, accelerate.africa/register. And what you can do is you can access the pitch deck of the startup founders. You can also get some information about their work, and you can set up or schedule a one-on-one meeting with them. So please use the link, because you're going to be hearing really, really amazing ideas, and you'd like to connect with them. Gentlemen, on that note, I'd like to invite Madame Bode Abifarin to lead the segment. Please, a round of applause for her.
All right, good afternoon, everyone. It's been an amazing couple of weeks with these amazing founders. So really happy to introduce the next founder, Pure Life, the amazing Mobolaji Ajayi. So Pure Life is transforming pharmacies into primary healthcare networks. Trust me, you want to listen to this. So Mobolaji Ajayi.
I come from a lineage of Nigerian women who nurtured people before they healed themselves. I did suffer a severe brain injury, and accessing the right medicines, diagnosis, and doctors was a struggle. And this wasn't just peculiar to me. I also watched some of my loved ones self-medicate because hospitals were either too far, too slow, or simply just unaffordable. When COVID-19 hit the whole world, it exposed how fragile and fragmented our healthcare system is. And there is a pharmacy in every 200 meters across the nation. And I knew at that point that pharmacy networks can do more with solving healthcare's fragmented problem. Today, we're turning these pharmacy networks into primary health centers. We're bringing the complexity of hospitals to a simple pharmacy setting and to the comfort of the homes of our users. We have redefined access, and we are doing it affordably and reliably. We're bringing it closer to Nigerians. And Pure Life isn't just a company. It's indeed my life's calling, and we have just gotten started. My name is Mobolaji Ajayi, and I'm the founder of Pure Life Health.
Hi. My team and I are turning pharmacies into primary healthcare networks. We're providing one-time transaction and subscription plans to individuals and businesses, and we're plugging in our technology and our logistics to our pharmacy network partners for seamless service delivery. Right. The first point of call for Nigerians whenever they fall sick is to visit a pharmacy. But pharmacies are just medicine stores, lacking access to support clinics and labs to diagnose illnesses correctly. But people still use these pharmacies to treat themselves anyways. And what this is causing is a 7 million preventable deaths a year problem, where misdiagnosis and drug resistance is on the rise. So the question is not if we need to build a new system, it's how fast we can build it. Digital first and digital only health tech companies have tried to solve this problem and failed. Yes, they aggregate care, but they don't have control over pricings, making them struggle to survive with very steep margins. Nigeria is also a hub for fake medicines and quack healthcare professionals, so most people will not trust a digital-only solution. We're the only companies in this ecosystem that is aggregating using logistics and technology, having fulfillment centers to build brand trust, and dominance on our supply chain pipeline. We sit on a gold mine of data, and we're successfully reducing the turnaround time to access primary care from 3 days to just under 3 hours at a much cheaper pricing. When an order comes in, we get prompted through our technology. And depending on the patient's location, we deliver our services either through our pharmacy partners or Pure Life fulfillment centers. We offer home care services, walk-ins, and telemedicine, where we're matching our patients with doctor's consultation, laboratory testings, pharmacy services, and aftercare support. We built an easy-to-plug-in system that's allowing our verified logistic partners to use our platform seamlessly. And our model is winning. We built from the ground up. We started from one brick-and-mortar pharmacy to becoming a national primary healthcare provider network. Because of our great service, we've aggregated a total of 1.3 million orders, with a 25% quarterly growth, reaching 18 states in Nigeria. We've bootstrapped till date, and we've accumulated a total revenue of $5.3 million, and we are profitable. 5 days, thank you. 5 days ago, my son needed a tetanus shot, and the satisfaction of getting it done from home made me really happy. And you know why? The time I would have spent in traffic and the costs, I could use it to buy him much bigger birthday presents and spend better time with him. What we have built and what we are continuing to build allows us to do much more than primary care. And that's why I'm proud to announce today that we've partnered with Skyda, a health insurance company, allowing us to distribute micro-insurance plans to our low-income earning patients using our network. Pure Life is building a solution that's becoming the Amazon of healthcare delivery and the CVS of healthcare services for Africans. So join the movement. Let's build the backbone of primary care together. Thank you.
Can we clap for Mobolaji again? It takes a lot of grit. Did you see that number? It's not easy. So I'd like to call on the next presenter, the next founder. It's called, the name of his company is Speech, Temiloluwa Babalola. So Speech is enabling businesses to engage their customers by voice in any language. Please, with some energy, let's welcome Temiloluwa Babalola.
Growing up was tough. Growing up was tough because I couldn't speak the local language, Yoruba. And so I would attend family gatherings and be unable to relate to my cousins and other family members. There was this feeling of exclusion and being unable to be understood or even understand what was being said. I vividly remember my grandfather sitting us and telling us stories, but I really couldn't relate to them because I didn't understand what he was saying. Now, those are lessons that I could have learned, gone away forever, never to be recovered. What if we could solve this problem? What if we could help people connect, understand each other, removing language barriers? That's why we're building Speech. My name is Temi, and I grew up in Ibadan.
Ekason, I speak the language now. Let's talk about communication. From cave paintings to WhatsApp groups, communication is how we connect and exchange ideas and information. But you see, for the 1.4 billion Africans who speak over 2,000 languages, communication faces a barrier: language. The technologies of today fail to capture the nuances of the languages that we speak. This is why we built Speech. We started by asking ourselves the question, what would it take to build a machine that truly understands the nuances of our African languages? Today, I'm proud to announce that we have built the best-in-class speech-to-text and text-to-speech technologies for the major Nigerian languages. And what has this done for our 600 developers on our platform? It has given them the tools to reach 200 million locals, 200 million local language speakers, whether it's in customer support, marketing, education, or entertainment. One of the things I'm really proud of is our business model and how we serve customers. Our annual licensing agreement, which we're rolling out very soon with a large East African telco giant, enables them up to 80%, enables them to reach up to 20 million users in this new region and reduces the cost by up to 80% of customer support.
Welcome to customer support. How can I help you today?
Màá fẹ́ láti mọ ipò àgbéjáde mi látàná.
Your package is on its way and will be delivered by tomorrow morning.
Ó dáa, ẹ ṣeun.
Ladies and gentlemen, this is what our technology enables today. This and more is what customers are building on our platform right now. But this is just the beginning. This is only the beginning. What we're building with our team of formidable engineers would enable, what we're building with our team of formidable engineers will enable thinking and reasoning in our local languages. Our machines will finally be able to speak the languages that we understand. Ladies and gentlemen, my name is Temi. If you want to be part of a future where nothing and absolutely nothing is lost in translation, let's connect. Thank you.
Thank you very much, Temi. Okay, so I'll introduce the next founder and the next company. I think for the first time, I've done many things and looked at many industries, but working with them, I've also gotten to understand why chickens are very important and how they get to us as well. So I'm very happy to introduce VetSac. VetSac enables all year-round supply of chickens at affordable prices. So I'd like to introduce Blessing Mene. Please, a big round of applause.
I grew up in Delta State, Nigeria, and my parents were farmers. They grew chicken and they grew catfish. And growing up, one of the best moments of joy I had as a child was sitting with my family to eat a bowl of rice and fried chicken. On a certain day, I remember my dad prioritizing feeding the chickens instead of, taking care of some household expenses. And that got me thinking, why? I then realized that a lot of farmers across Nigeria, just like my dad, struggle with the high cost of chicken. And when they produce the chicken, they don't even have a market to sell it.
I tried starting a poultry farm and it failed because one day rain came falling,
chickens went swimming. At that moment, I felt the pain of a poultry farmer's interest. And when I met Blessing Mene through a leadership platform, I saw what he was doing. It felt like, yes, I needed to be a part of this.
Today, VetSac helps farmers like my dad get access to the credit they need and also access to the market they need so that they can grow chicken all year round and provide that to food businesses and people like me and you so that we can eat chicken whenever we need to eat it at the best price possible. Hello, my name is Blessing Mene and I am the CEO of VetSac.
My name is Mayowa Ajayi and I'm the CTO of VetSac.
So, how many of you here enjoy eating chicken? Raise your hands. Yeah. Across Nigeria, we eat 160 million chickens every year. By the time I'm done with my presentation, Nigerians would have consumed like 10,000 chickens across the country. So it's very exciting. But we're not always happy. You know, when you go to the restaurant to order your chicken, you have to pay more money, right? For less chicken on your plate. And how many of you are excited about that? Aha, yeah, no hands up. It's something that we're not happy about, and I want to tell you the reason why that is happening. So, everything starts with a farmer, right? So, farmer Jonathan, for example, right? Who takes 6 weeks to grow a chicken from when they are a baby to when they graduate from the farm, right? And then land in your stomach. It takes 6 weeks. The farmer grows the chicken, but he does not produce enough chicken for the market. And that's a very big problem. Let me tell you why that's an issue. This farmer, Jonathan, in this case, has a farm that has the capacity to grow 5,000 chickens. But it's only growing 1,000. Can you see where the issue is? The big problem is that animal feeds equals 80% of his expenses. So in order for him to scale by 5x, he needs enough working capital to cover the cost of feeding his chicken. So you see why this is a big issue, right? VetSac helps solve this problem. We help the farmer grow from 1 to 5. From 1 to 5. And how do we do that? We help them take away their headache. The farmer's biggest headache is like, how do I get enough resource, enough animal feed to grow my chicken in my farm, right? And how we're doing that is simple. We're providing I grew up in Delta State, Nigeria. Okay. So, we're providing them the animal feeds they need to grow 5,000 chickens, for example. Number 2, we provide that to them as credit. We bundle that with insurance. Because like Mayowa said, chicken business is a very risky business. And so you have to be very good with managing the risk. And I can see a lot of people nodding their head. Thank you for confirming that, right? So the most interesting part of our model is that by the time we are done with the production, we handle the processing of the chicken, and then we sell that chicken to food businesses all year round. Now, in the last 1 year plus, we've done 1.2 billion naira in sales, and we have a 99% repayment rate. Not play with us. And we've grown every month at least by 90+%, and we're very excited about this. We currently have farms across 12 states in Nigeria, which is 1/3 of Nigeria. We supported more than 400 farms across the country, and we're very excited about scaling this up. Now you might be asking, how does this really work on the back end? It's pretty simple. We've built a scalable technology. We're really good with risk management. That's what we do. So, from when the farmer applies for animal feeds on our app, we do physical KYC, digital KYC. We do credit risk assessment on each of the farmers. We try to understand the risk of doing business with that farmer. And once that farmer is approved, we supply them the animal feeds they need to take their business from 1,000 chickens to how many thousand? 5,000 chickens, very good. And this is not just Apple. If you see our back end, you say, praise the Lord. Yep. Now, let me talk about my team. We've introduced ourselves, but I have a background in agriculture. I took courses in veterinary medicine, graduated in chemistry from the Ahmadu Bello University, Zaria, and Mayowa has a background in engineering and Technology. Cynthia Mene is our director, and she currently works with the IFC. Everything we do is about one thing: provide reliable supply of chicken. How many? All year round. That's what we do, and we're very excited about doing this. If you like to make money doing chicken business, come talk to me. And just to cap it all, we get money from investors, from debt funds. We send it into the chicken farms, make money. We're already profitable, actually. And so if you're looking to make money doing chicken business, come talk to me. Thank you very much. Thank you.
All right, fantastic. So quickly, we'll move to the next founder. The name of the company is DG Tech. The CEO, Alexandre Njore. DG Tech is scaling Africa's specialty insurance market in Hyperion, a platform already trusted by over 200 insurance and reinsurance. I'm happy to introduce Alexandre. Thank you.
And exactly at the age of 7, I remember spending my Christmas day solving a 200 pieces puzzle, which took me the whole day from about 7, 8 o'clock in the morning up to 6 p.m. in the evening. This is unusual for a 7-year-old kid, but that passion for solving complex issues and building systems has basically taken me away from the corporate world where my career started in the airline industry and telecom industry to the entrepreneurial journey. So the boardroom was too boring for me. I needed to step into the actual action, which is basically being woven within the entrepreneurial world. And nothing better to attack, nothing better to solve than to crack the puzzle of the insurance industry. When I was working for my last corporate position in Tanzania a couple of years ago, I was amazed and thrilled and honored to see how the insurance can make an impact into the daily lives of individuals, especially farmers. Going back to my country, I just realized that this fragmented industry was all around Africa. And on that day, we made the decision to start Digitech to bring our contribution to solve that fragmented industry issues to life. My name is Alexandre, and I'm the founder and CEO of Digitech.
Hello, everybody. So, as you guys can see, risk is everywhere. And we enable insurance companies to be able to provide insurance cover for farms like what VetSac is doing. So insurance basically has been existing for the past 250 years to provide us protection against risk, which is lurking, as you can see, and which can strike at any given point of time. But the problem is, if you are an insurance company in Africa, you're probably sitting in a boardroom trying to figure out how to catch your share of the growth that you can see outside of the window. But you do not have the systems and the tools to capture that share of growth because the systems that you are using are not built for you. Last year only alone, the whole world added a whopping $100 billion in specialty risk, including agriculture, farming, and etc., while the share of Africa, as you can see on the screen, was less than 1%. This has to stop. This is why we have built Hyperion, which is the first AI-enabled powered reinsurance and insurance operating system, which is basically allowing insurers and reinsurers to do a couple of things: risk profiling, process automation, and reinsurance aggregation. Hyperion is a marvel of robotic process automation, which is being magnified and accelerated by AI. We provide a world-class interface which allows insurers and reinsurers to do real-time instant account creation, policy underwriting, and reinsurance automation. And if you don't trust me, just check those numbers. We are currently serving 200 insurers and reinsurers across 14 countries for 160 million policies processed over the last couple of years and over 300 million premiums managed. And this has brought us revenues over $500,000, including SaaS revenues and commissions. And those countries do not include Nigeria yet. So I'll let your imagination work. We are actually sitting on a gold mine which is expanding. The specialty risk market is going to grow by 10% by year 2030. Yet, most of the African insurers are not ready, and this is where Hyperion makes a difference because it creates a bigger gap for Hyperion to just fit in. And the team which is leading the charge is, of course, led by myself. I'm an engineer who got multiple degrees, including an MBA and multiple certificates in blockchain and machine learning. And I'm surrounded by a fantastic team, including 2 PhDs, one in actual sciences, actually. Their story is bigger than us. We've built the engine, we've wired, the train is moving. We're just asking you to bring us the fuel so that we can unlock the $10 billion opportunity that will constitute specialty risk. My name is Alexandre, and I'm the founder and CEO of Digitech.
All right. So I'll call on the next founder. The name of the company is called IWM, led by Mohammed Lepta. IWM provides us with private banking with no minimum balance. Please put your hands together and let's welcome Mohammed.
I had a very bad personal experience where I witnessed my father lose half of his wealth at age 75 when Egypt had a major currency devaluation in 2023 and the government imposed strict capital controls. I could not open a bank account for him because we asked for millions with these banks. My father was not alone. Hundreds of thousands of affluent Egyptians and millions in all other emerging markets suffered similar experiences. Banks, the trusted big banks, have always kept the access and advice of wealth products to the high net worth individuals. And we're changing that with IWM, which will be providing a US private banking account to all emerging markets with no minimum balance required. My name is Mohammed Libda. I'm the founder of IWM, which is an AI private bank.
Hi, hello? Hi, can you hear me? Amazing, amazing. Hi guys. So, my name is Mohammed Libda. I'm the founder of IWM. I was at Citi Private Bank in Switzerland for more than a decade, managed $500 million of Egyptian wealth. So I've seen how it's done at this level, and I had this experience with my father. So what is IWM? It is an AI-enabled private bank that provides you a US bank account, deposits insured up to $1 million with wealth management services and a Visa card with no minimum balance required, just $10. We've seen my father's story. 50 countries went through that. You guys have seen what happened to the Naira, to the Egyptian pound. We've all here, have experienced one time, being denied a bank account offshore, or even when we're banked, we're not getting access to the best wealth management products. And we're here to change that. And here's the magic. Here's the magic of how we do it. The reason there are minimums is that humans cost money. I was a private banker sitting in Switzerland, and I cost a lot of money. I used to cover 50 clients with Citi, but with software and AI, I'll be able to cover 500 clients. The beauty of this opportunity, of this business, is that it is one setup in the US, one license, and we're looking at all emerging markets. A $20 billion revenue opportunity. These are not assets, that's a revenue opportunity. We're starting with Egypt, South Africa, and Nigeria, $1 billion opportunity. Can't ask for a better team idea fit. With my experience, we have the guy who ran investments at City Private Bank in London, the guy who's running compliance at BBVA. On traction, one of the most difficult things to get to do for a fintech is to get a bank to work with you. We got a US bank, a US brokerage firm, and Visa to work with us to onboard clients from all emerging markets, except sanctioned countries. The app is launched, just, my network on LinkedIn, we have the amount of clients, 10% of what we need to break even. We have deposits committed, $2.5 million. I'm not surprised, I used to manage $500 million. If you want a bank account, or if you want to invest, come see me. Thank you.
All right, so the next panel is something very important. In different languages, you know what it is. If I say owo, you know what I'm talking about, right? If I say ego, you know what I'm talking about. If I say kudi, you know what I'm talking about. Where's my friend from Kenya? How do you say money in Kenya? Pesa. You see, I've heard pesa, definitely. Okay, any other countries represented here? Tell me how you say money in your language. Pari? Paris. That's how to say money. Which language is that? Shodan. Paris. Marie. I like that one. I like the sound of Marie. All right, so we're moving on to the next panel that's focused on funding locally, how local capital has built the foundations of Africa's innovation system. And very quickly, I'll invite our moderators and the speakers and invite you all to please, in that energetic spirit, be generous with the applause. Please welcome to the stage the managing partner of Innovate African Fund, Christine Wilson. A round of applause.
All right, thank you. Awesome. Yeah, well done. Hi, everyone. Here, like she shared, I'm Kristen Wilson, managing partner of Innovate Africa Fund. We've made some wonderful adjustments to our panelists, so I'm going to go ahead and introduce them. So I'm very happy to introduce Dr. Suleiman, who's going to be joining us. He's the board chairman of the African Venture Philanthropy Alliance, also called AFPA. AFPA has been doing some really important work around mobilizing philanthropic capital for impact as well as for scale. So Mr. Dr. Suleiman, please come up. So let's give him a round of applause, please. Yes, you can have that seat. Yes, please. Okay, and then the next person I'll be introducing is Dr. Inameka Okereke of CSES. Dr. Inameka Okereke is a doctor of strategy. But most importantly, the work that CSES is doing is offering depository services, which are really critical for facilitating liquidity in markets like this one, where we're all asking about exits after we make our investments. So let's welcome Dr. Okereke as well. Let's give him a round of applause. And last but certainly not least, the easiest man to identify in any room, I'm very happy to introduce Idris Bello, who is the founder and partner of Lofty Inc. Capital. Lofty Inc. recently raised a pretty impressive raise, but critically, Idris has been a player in the ecosystem for over a decade now, and has been a really big champion of, one, mobilizing capital, and two, early stage investing. So let's welcome him up to the stage. All right, awesome. Thank you so much, everyone. And it's really good to all be here. So our conversation today is really about local capital and the role it plays in our ecosystem. And I'll start off by introducing myself, and then I will throw a question to each of our panelists that will essentially help us to frame the conversation that we're having. And then after I've asked them a question each, I'll ask another couple of questions, and then I'd like to invite you all into the conversation so that we can really kind of understand, because like our host said, this is a really important conversation. The work that Accelerate Africa and Future Africa are doing around mobilizing capital and bringing capital to the continent is a really critical one. And it's one that has played a role for a long time, but thankfully is getting an even bigger and bigger role. So I'm really excited to be having this conversation with incredible local investors and folks who are enabling local investors to participate in the technology ecosystem. So a lot to learn here. So I'm Kristen Wilson. I manage a fund called the Innovate Africa Fund. We place early bets in sort of maverick innovators, technical founders, big thinkers who are tackling what we like to call wicked problems. So wicked problems being complex, deep-seated problems. So we invest a lot in companies at essentially the edge of technology and the edge of innovation. So I'm really happy to be here. So I'm going to kick off with my very first question. And I'll start with you, Dotu. And I think the first question that I want to ask you, particularly as somebody who you sit on a lot of boards, but you've also been in the ecosystem, you're an investor as well, is how have you seen the local capital landscape sort of evolve over your career, particularly in a market, Nigeria, but perhaps if you can speak to a little bit across the continent.
Thank you very much. Good afternoon, ladies and gentlemen. I'm glad to be here. I was introduced as chairman of AVPA. I would say of all the things I do, that's probably the least relevant to what we're talking about here, but I understand that anyway. But the thing about, of course, the subject is capital to fund innovation and startups and so on. And we've been doing that for a while now. I would say we started from the knowledge, what I would call the knowledge base. Not many people in a part of the world are comfortable giving their money to somebody else to work with for them. And for a variety of reasons, some of those reasons are cultural. And of course, some of those reasons, of course, also have to do with the absence of the safeguards that we find in other countries about to give your money to somebody else and that has been accountable to you and all that. So I would say the concept of what you call the joint stock company, which allows for the pooling of investments, is something that doesn't quite sit well with our local culture and is only just beginning to evolve. I remember when we started the Lagos Angel Network many years ago, just explaining to people to give their money to young startups was an uphill task. And now, the thing that brought it forcefully home to me was an incident that happened maybe 5-6 years ago when I went to the Metropolitan Club in Lagos to sell them on the idea of angel investing. Now, you need to understand the Metropolitan Club is the club of wealthy people in Nigeria, wealthy professionals and so on, mostly retired, and they control everything. So I thought I had in front of me an assemblage of people who had money, who had time, because they were heavily, mostly retired, and who had the network. And those are the things a young startup needs. You need coaching, you need hand-holding, you need a bit of capital, you need somebody to open doors for you. So you would have thought that talking to a group like that about angel investing and all that, that would be a solid recruiting ground for angel investing. I think I must have spoken to about 200 or 300 people that afternoon. And after the speech, only one person in that group of also one of the wisest people in Nigeria came up to ask questions about that thing you talked about. How do we want to make a start? And fact of the matter is that they have money, but they are not comfortable with giving that money to somebody they don't know, maybe some random young person. And of course, they also have views about young people being irresponsible, not being able to do anything, and so on. So it's been an uphill task, but it's improved since then. There's been some success stories regarding angel investing, early stage investments. Some significant businesses have been built in the last 20 years as startups and so on. They've become game changers in the economy and so on. And some of the stories have been well told as to how they started humbly and how they've become unicorns and so on. So I think a lot more people are now more curious about angel investing, about putting their money to work with young entrepreneurs. And so I would say early days, but the future is good. But what will help it, of course, like I said, like it's happened in the past, is success stories. The more success stories you get of money entrusted to young entrepreneurs that they've been put to work, develop businesses and so on, and see some of those money being returned, then confidence level will build, and they will probably begin to attract more of such capital.
Thank you so much for that. Thank you very much. And I'm actually going to return to your point about AFPA. I'll tell you why I think it's actually very important. But I really appreciate what you shared. And I want to actually comment what you shared about, the importance of, the angel investors, the challenges around angel investors. And I think the one question I will ask you to share before I... Okay, perfect, thanks. All right, so before I invite Idris into the conversation is, what have you found in that period and in that room was the kind of spark, right? So even if they didn't come to you after that conversation, what happened afterwards, or besides the success stories that prompted them to maybe ask more questions or engage?
Well, talking about that specific group I referred to, not very much has happened. So, which basically tells that we still have a lot of work to do to get people interested. But there's a lot of capital out there. A lot of them are in bank accounts, savings accounts, and Ponzi schemes, and so on. But actually giving money to a startup, either in form of debt or equity or convertible and so on, is something that I don't know whether it's sophistication or awareness, but I think there's a lot of work to do in that department. I also had the experience many years ago of having done a lot of angel investment myself, so maybe it's time to pull other people's money out to set up a fund. We actually set out to raise a fund, and it was tough. From your fund, that it's easier to raise money from DFIs, from foreign something, than to raise money from local millionaires and billionaires. You just look at the money people in Nigeria and you find out where did they put their money. Very little of their money is put in funds that are managed by other people, and very little of their money is put in startups.
Thank you so much for sharing that, and I absolutely agree. I mean, our fund, we didn't raise from DFIs, but we definitely didn't raise from local capital either, because like you said, it's very difficult. But Idris, I think it's a great moment to bring you into this conversation, because you've also been fighting this fight of getting capital. You started the Afropreneur, Angel Investment Network. You have a fund now. And so I would like to see it from also your perspective. You sort of abandoned a life in the US and said, I'm going to come and do this here. And you successfully raised a fund that I know mobilizes some local capital. So I'd love to hear what your experience has been and how you kind of see the landscape. How has it evolved, right, over the past decade? And what do you kind of see coming ahead of us?
Hello, can you hear me? Good afternoon. It's a pleasure to be here. Firstly, I'm honored to be here with Daddy Dr. Sulaiman. As a Yoruba boy, I can't say Dr. Also because you might not remember, but at a couple of junctions, in my investing journey has been there. In 2012, when LAN was formed, and very few people know this, LAN initially used to be called Lofty Inc. Angel Network. In 2012, we approached the World Bank for a grant to scale it up, and they said, make it more inclusive. So we sent out an email to the likes of him, Mr. Simeon Adebo, TD. Is he in the room? Okay, yeah, Uncle TD, right? And they took it on. Because we didn't have the credibility. When you talk about the doyen of corporate Nigeria, is sitting here. No one knows Idris Bello, right? So we didn't have the credibility, but they had built the credibility. They took that on. They could talk to their peers, and they, today it's an example for angel networks around the world. So I'm honored to be here. Then also 2017, when we were starting our fund, I brought my co-GP, Marsha Wolf, here to visit, right? And we met with him, getting advice from him. And by the way, she's actually next door at Nordic. 7 years later, she's visiting, 8 years later, visiting again with exits, based on the advice you gave us back then. So I'm honored to be here. Also honored to here to support Ian Aboyeji. Many people don't know, I wrote one of Ian's first check in 2013, right? And since then, I've had at least 3 exits through Ian. So when he tells me to jump, I ask how high. It's my ATM. So, yeah. So, but again, I think we have had a journey, and I think I'm going to share that journey briefly here because I think it probably helps. 2010, I came back from the US and said, what do we need to do here to encourage local funding, local startups? And we formed what's now called the Innovation Hub in 2010. Fast forward 2 years later, we had ideas coming out of that place, and we said, how do we fund these ideas? And that's what led to later Lagos Angel Network. But like he said, it's tough to convince local capital to give money. And they were doing a great job of trying to tell the bankers, the lawyers, come and put money with land. But it was slow, because I had to convince them, you have to educate them. And we realized that by the time they came back usually to us to say we like that company to invest in, the company was dead, because we had not gotten funding from that. So we decided to start writing checks ourselves. And in 2013, we wrote checks in the likes of Hotpay. I don't know how many people remember Hotpay here. It's dead now. One of the workers there is the founder now of Chowdeck. So again, some of these things die, but they become manure for other successes. And so 2013, we wrote checks into people like Hotpay, into Fora, which became Andela, right? Into BizBox, and many other folks like that. And that was how the journey to investing in this space really started back then. And then 2017, we decided to start our own fund. Similar to what you are saying about raising a fund, we struggled. We went around locally, we barely struggled to get funding. We ended up raising only $1.1 million over 4 years. But what we did was we were investing it. So we invested in Flutterwave at seed. Again, thanks to E. Right? We invested in companies like Reliance Health, which used to be called Campy, Terragon, ePump, a few companies like that. By 2021, fast forward, we exited Flutterwave at the unicorn round, returned 15x, right? And gave our LPs money, and they were very happy. Now, what then happened was, in that, and going back to the talk of local capital, in that small group of investors, there were some retirees from ExxonMobil who were lucky in 4 years to have a huge exit. And so they went back and told some of their contemporaries, when we both retired, you put your money in rental houses in Ikoyi, we put it with Lofty Inc. This is a return in dollars. Yours, you can't sell the houses, Naira has been devalued. So when we're going to raise the next one, we didn't have to beg them. We had a whole lot of ExxonMobil folks, Chevron folks from Nigeria, and which formed a core, and then we then raised money from the likes of Fola Adiola, the likes of FBN Quest, the likes of Meta, right? We raised about 14.2 in 2021, and I will just announce the first close of $45 million of our latest fund from the IFC and a few others. So, but again, it's been a journey, right? And he would tell me back in the days, he would say, Egmont, be stubborn on the destination, be flexible on the journey. And that's one thing I've realized. Again, there's no one straight path to all of these things. Even as a founder trying to raise money, be very clear-eyed on where you are going, but it's not going to be a straight line. And that's what I've learned even as an investor here, as an angel, as someone who's putting my own money. And when I look, so to date, we've written about 150 checks plus, right, into different companies, many of them dead. We've also been privileged to have had exits from the like of Andela, Flutterwave, Move, Reliance Health, and so again, it's been good. But again, when we look at it, our first couple of checks, we said he gave us an LLM. You know what the meaning of an LLM? What's an LLM? Huh? No. Learning by losing money. That was usually how we learned. Because we were writing the checks, there was no thesis. A lot of it was over Skype. There was no Zoom. I was in the US meeting people over Skype. I'll give someone 25K, wire it down. Two weeks later, they will tell they will be unreachable. Money was gone, right? But I learned what not to do. And over time, we built processes, but we kept doing. And I think being here 13 years later, looking at the ecosystem, looking at being able to put a room like that together. In 2013, he could not raise 100K in his ear. We struggled. We went round and round for everyone you can imagine in Lagos, trying to raise 100K for what became Mandela. But today, again, people start without a deck, they're raising 100K. So we've made progress. We're not there yet, but again, I think the work they have done, the credibility they have built, that we then layered upon has been very helpful. And I'm going to end with this. It's very important that we do not destroy that credibility. When founders are given money and they change their lifestyles, they don't run companies properly and start living large. We are destroying the credibility that people have spent 10, 15 years building. It's not a problem that your company does not succeed, but put in the effort and then try again, right? But if you're going to take that money and turn it to entrepreneur as a service, right? And use it to fund your Japa, your Japa stuff, then it is a problem for us because we can't go back to the likes of him or his friends at Metropolitan Club and say, give us money again. So again, nice to be here and thank you.
Thank you. Thank you so much. Thank you so much. Okay, so Nnaemeka, we'll come to you. And I think it's really helpful context, and I like how this is kind of building on each other, right? So the work that you do as a depository is very important for building trust, right? Today, in many markets, if you're trying to get a fund licensed, you're asked for your custodian, you're asked for your depository. So I think, first of all, for those of us that are not fund managers in the room, I think definitely start by helping us understand the work that a depository does. And then my question for you is really around how do you kind of see the role that you play evolving in this particular market where we haven't matured yet, that we're seeing the listings on our own. In fact, most of our companies are not necessarily listing here, right? They're listing abroad and so on and so forth. But there are funds operating here. They do use your services. And there is a growing opportunity in both the local capital market as well as, the blended markets that are emerging. So I'd love to hear from you where you kind of see things going.
Thank you for the opportunity. First of all, I would like to extend the apologies of my principal. We had the board minute run late, and so I had to rush down here to be here. Before I answer your question, let me build on what Egbon has said, as well as, Idris has also mentioned. When he mentioned Metropolitan Club, it's a context thing, because most of the people in the room at Metropolitan Club are at the, will I call it, the harvesting stage of their life. So they are not in the planting season. And so when you meet them to give you their money, they are not necessarily, they don't believe, they are not at that, that's not a game they are interested in at that point. And so what you end up seeing with more or less local angels is that they are investing in the people rather than the ideas. They don't really care about the ideas. And so if you go back to historically, I call it commerce and economics class back in the day, they will tell you the first place you raise money from is from family and friends because they know you. They don't necessarily care so much about the idea that you're doing. They are just believing in you and your vision. Which brings it to Idris's point about the your idea sticking to your vision and adjusting the journey. With regards to CSCS and our local environment, well, there is a lot of private capital here in Nigeria. And when you, in the structured environment we have with regards to regulation, it's difficult. Take, for example, we have 4 trillion naira in the pension fund that are looking for where to go to, but they are restricted on where they can actually invest because the rules are the rules. And some of these pension funds in more developed environments actually can invest in startups and technology-driven assets. For CSCS, what we do as a depository is that we hold different asset classes. You talk about your shares, you talk about bonds, you talk about commercial papers. We hold all that for the market to be traded. And unless people, and that gives some form of trust to the people who are investing, because if they tell you this entity is holding the asset on your behalf. Take, for example, about 60% of the Nigerian transactions done in Nigerian capital market are done by FPIs, foreign portfolio investors. And so one of the reasons why they actually invest in our markets is because they know there is somebody holding it. And so when you have a situation where somebody wants to raise some of our HNIs, you talk about Dangote, you talk about the different owners of these listed entities, they want to raise debts. They use their shares or their equity or whatever to go into international investors to tell them that I want to use my stock or my portfolio that has been held by CSCS to raise additional funds. So you don't have to go and sell your entity, you just raise debt on that particular instrument. And there's some level of trust that because it's held by CSCS, it adds that the level of trust gives them the guarantee that irrespective of whatever happens, those assets that you use as collateral are available for them to call back on. When you meet some of these funds, locally or those from the international market, that do not see it that you don't, who is holding the asset, you just have a CAC registration. How are they going to trust that you're not just going to move the fund somewhere, like Idris mentioned, and run away with it and jackpot? So this is some of the, what will I call it, one of the key things or the primary thing the CSCS does to any type of fund is to incorporate trust into the transactions. And so with that, you come into the local market and you tell me, I want to, ordinary federal government savings bonds, I want to invest in the federal government, but then somebody is holding that asset. It's not just a theoretical entity. It is an entity that I can go somewhere and check that it exists there. It's quite important to even raising money outside your family because, well, your family and friends, for example, you end up, they know where you live. Even if you want to run to your village, they know your mother's house, they know your father's house. That's family and friends. But the investor does not know that. And so, because they don't know you, they just need somebody else to validate what you're doing. And so that's what CSCS brings to the table in terms of raising local capital.
Thank you for that. I actually have a follow-on question too, one for Idris and one for you. So the question for me though, that I'm interested in is how do you see the work that you're doing evolving in this landscape that's asking for change, some adjustments that are better suited to accelerating access to local capital. So for instance, when you were speaking, you spoke about the fact that in other markets, pension funds are able to do more. Not so much in this market, right? So for you, from your vantage point, where do you kind of see, or what are the levers that you see need to be moved to be able to create more pools of liquid capital, available capital that is securitized, that is, built with trust and held with trust?
So first of all, we have policy changes that need to be made, right? when you look at Ponzi schemes and all that, you know that there are people looking for where to put their money. And so when somebody hears, and we have a lot of founders in the room, but you end up hearing a lot of times bad news travels fast. So when there are failures, they tend to get to be heard more than the success stories. And in the real sense, there are very few success stories because we end up hearing, let's take from a proof of concept perspective. You have an idea, you want to develop it. Some ideas actually are very good, but they are not timely. It's not time for those ideas to actually be built. When you compare Facebook to High Five or back in the day, it's basically the same thing that they were doing, but High Five came before its time. There was no market for it at that point. And so in the local capital would just help you with a proof of concept. And it gives you that patient money, which really doesn't exist in Nigeria because, and it's only from your, what I call it, your family and friends that you can actually have patient capital. Because if my mother gives me money today to go and invest in a business, I don't think she's going to ask me a year, 2 years down the line, how far, where's my interest or where's my investment? However, when you go to investors to go and ask for money, they're looking for return. So even if you talk to the pension funds, for example, they have to talk to the retirees who are expecting their livelihood to be taken care of by that PFA. So that risk element is quite critical. However, if, for example, out of the 4 billion, maybe there's a 5% of that 4 trillion figure from pension funds or from other funds that can be allocated to this via policy changes. You also have incentive structures for people to get listed or get to come to the market. So you have some form of tax incentives for funds to be able to give financing to startups. There might be some benefits because you end up hearing today the government raises a lot of money for infrastructure, but then the growth actually comes because like I was speaking to Ian a few weeks ago, Africa is, the tech space only helps address a certain component of the challenge. We also have a big gap with an infrastructure problem, so the physical infrastructure. So while we are channeling resources to the physical infrastructure, we also need to channel some form of those resources to technology because it helps us accelerate that growth curve. And so if there are certain policy changes, maybe tax incentives that can help or that can be put in place, then more people would get involved in investing as an angel investors locally. And maybe they would not fall for the Ponzi schemes.
Thank you so much for that. So Idris, the question that I wanted to throw at you based on what he was saying. So for those of you who don't know, Y Combinator pioneered the SAFE instrument, right? And has since come up with the MFN now. But something that has been floating around for at least a few years, maybe even longer, is the idea that that instrument is perhaps not ideal for our low trust market. And so I want to hear your thoughts on that. I want to hear your thoughts on, because for instance, that safe cannot be securitized by his depository. What do you think about these calls for creation of instruments that are better suited to low trust environments? And how do you think that affects the founders in the room and also that credibility point that you ended on?
Okay, so I'm assuming most of us know what a safe is, right? Okay, cool. So when safes were created by YC, it was to solve a problem. The challenge is people have extended it beyond that problem to the extent that safes have now become unsafe, all right? And so you see companies that have raised like multiple safes upon safes upon safes. And the challenge a lot of times is the founders do not even sit down to simulate the conversion of those saves. So we've gone to companies where they're still raising on saves, and I say, please, give me the list of all your saves. And I put it in a simulator, and realize he sold 80% of the company, and doesn't realize because he's not even try converting it. He's just adding it and adding and adding it. So we have a principle right now with our new fund where we only do saves as a last resort, right? And we avoid, you can't have more than 2 rounds of saves. By third round, you have to convert, right? So we'll come in and, because we are putting in average of about $1 million checks right now. We'll come in, find other people and try to convert. If you can't convert then, because you need the money right now, we'll do this save, but within 6 months, we have to convert you. Because again, a lot of times you are postponing the problems until Series A, right? And then the big investors come in, and then it's all just messed up. The cap table is messed up. So I think they still have their own role. Again, and I think that's why I differ from a lot of people who think we should do away with the saves. No. Again, you're only raising 50K, 100K. You don't want to incur a lot of legal costs, times. You don't even know where things are going, whether this will survive. So they still have a role. But I think it's not overextending the usage, not piling them upon each other, understanding the concept of pre-money saves, post-money saves, and what it means for your ownership. I think those things are very, very important for founders. So then lastly, the best thing you can do for yourself as a founder is get a good lawyer from day one. People don't understand this. I've said this over and over again. They go and find their friend who dropped out of law school, right? Because it's cheap, or someone who's active on Twitter, right? The law. You go and get Lai Wasabi, right? Again, and then you just put something together. And then 2 years down the line, it's a problem. The amount of cleanup you have to do, or you bring your uncle in, you sign a side agreement that gives him 25%. That's not pass through any lawyer. The day you become big, it's now a family problem, right? We've seen so many of this. You see people who don't sign founders agreements. We had one we backed here in 2019. I'll mention the name now. They can't come and beat me. Torah. 2 female founders and another male founder. And we said, okay, this is the founders agreement. We scheduled it out, go and sign it. And we thought it was signed. Until 6 months later, the CEO said, in 2 weeks' time, I'm going to Canada. And I'm like, are you visiting your friend there? I said, no. I'm moving there for 2 months or what? No, I'm relocating. You didn't tell us when you were collecting money from us that you are going there. Okay. If you are going, let us make someone else the CEO. Luckily, we have a vesting schedule in the founders agreement. Bring it. That's when we realized they didn't sign it. And she owned 34%. And someone was SDC, an accountant. And she refused to drop 34%. I said, why? But you are going now. Let us, 5% would have vested normally. We'll 25% for you. We'll continue to run the company, find other people. She said, no. I'm going to settle down there, and in 2 years' time, I'll come back. She's not back yet. It's been 5 years. And the company is dead now. But because they did not do that very simple, they trusted each other. So they didn't sign the founders' agreement. They couldn't do anything. So again, we said very early, we go in now, we bring our lawyers, we tie everything out. And sometimes it takes time. So we can't have a check for you next day like we used to do. Ask E, back in the days, was trust. You need a check. E will call me and say, Egmo, I need 500K within a week. Then 6 hours later, we'll say, Egmo is complete. I was like, Egmo, how is it complete? Those are fine. No, but we're not doing that anymore because people have betrayed the trust over time. So we come in, we bring our lawyers from day one. You will go through your agreement. Everything, because that's the only way you can build good foundations for others to come and build upon. So again, take the time, do those things. Always believe that this could become $1 billion company. And that's one of the things. Sometimes we don't believe ourselves. So you think it's just a hobby. So you don't do the right things. And then when the problem comes, you now start running helter-skelter. So again, let's do the right things. We're going to do saves. Let's be very clear what it is for, who is owning, how is it going to get converted, and then what portion have you given away, right, before you raise the next save. So again, those things are very important. I know we're running out on time, but I wanted to say something about local capital because, again, it's a very important thing. Many years ago, when we started 2014, we decided it was important for us to grow local investors. Not just because we needed their money, but because we also thought it was important for us to grow wealth. Otherwise, if you raise good companies here, you have the Andelas, the floater waves, and only foreign investors invest in them. You will only be reading it in TechCrunch that they have become a unicorn. You won't see the wealth circulating. So 2014, when we were doing the second round of Andela, and they said you could do the friends and family round, I sent an email out to my mailing list and said, I've backed this guy, Aboyeji. Now there's a second chance. Let's put in money under my vehicle. And only 4 people, I have probably about 500 people on my mailing list, 4 people responded. And they put money in. Again, there was small amount, 5K, 10K, we put it together. 2016, when he called me and said, come and do Flutter Wave. Who can guess what was the valuation of Flutter Wave then? Who can guess? The valuation of Flutter Wave in 2016 when we came in was $2.5 million. There are no deals now for $2.5 million. And it was post-revenue, right? And I called the people in my group. There was 10 people in my mailing list who came in, and they put in small money, right? Fast forward, also when we're doing our fund, we created an SPV for Nigerians at home and in diaspora. People put in as low as 1K, 3K. But we're doing it on purpose. Because when we ran into issues with licenses, it was not the big guys we were calling. It was these people we were calling. When we needed access to FMCG accounts, these were the people we were calling. When police took our people, right, in the middle of the night, and we needed them to be released, these were the people we were calling. And when we exited Flutter Wave, I saw people who had put in money who were now getting hundreds of thousands of dollars and were able to sponsor their kids. I saw someone who had put in 3K initially in our first fund, but now we're doing this our fund this year, they put in $1 million. Look at that jump. And so again, as we're investing in founders, it's also important we're investing in the local investors. Because those are the people who are going to save you on the rainy day, right? And I know sometimes some of you, when they see big investors giving you 500K, you start ignoring the 5Ks. Those 5Ks are very important. Ask E, right? Even the days when we're doing 5K, we will pick his call anytime, right? So always look for strategic investors, local, even if they're putting in small money, because it makes all the difference. Thank you.
Thank you. That's really important. Thank you. So I really like the point that Idris made a little bit earlier about starting well, right? Starting with the right professionals. And I think it's important to bring this question to you because you've had such an extended corporate career. But many startups today, right? Indeed, some are are founded by some great idea or some great team, but many are also coming from a place of need. Right? There's high rates of unemployment. There's, underemployment even for people in jobs. So many startups don't have that corporate context. Many startups don't understand what a good lawyer is, right? I encounter startups who say, I have a lawyer, I'm paying them, and then I see what the lawyer is writing. It's not even grammatical, right? And so the question I have for you is, one, what is, kind of quick or accessible advice that you can give to the founders in the room here around identifying the right sort of professional or the right sorts of networks? Are there resources that have been created, maybe as part of CSR initiatives or by funds, that these founders should be tapping into so that they can access high quality professionals, trusted, vetted professionals that will help them to, one, create the right sorts of structure around their business, but also because I think the value of having professionals support you, lawyers, accountants, is not just the sort of protection of the business, but it's also the passing on of good habits, right? Corporate habits, corporate structure, and so on and so forth. So I'm curious, where do the founders go to find these people? And what have you seen work, particularly when you only have $50,000 to play with or $100,000 and so on and so forth?
I think the issue you raise is for me, is founded in what I call the nature of the founders that we have. A lot of the founders I have found out from my own experience are people that I call entrepreneurs by circumstance. There are no jobs. If there were jobs, they should be entering a career and building their way up and so on, and just pursue a professional career. But many of them, of course, don't have the privilege. The economy is not growing as fast. Jobs are not being created. So the only recourse is to be self-employed. Now, doing so without formal experience in the corporate world also leaves them out of understanding how businesses run, why things are done the way they are done. The whole idea of keep your records, audit your accounts, pay your employees fairly, be fair to your customers and so on, don't cut corners, take the long-term view. They don't have the experience. So one of the ways, we've tried to bridge that, at least in the early years, was through a lot of training. You spend a lot of time and effort training these young entrepreneurs on how businesses run, how the importance of organization, the importance of relying on professionals and so on. But again, it's still a task and that still has to be done. I think, from the point of view of investors, what we've learned from experience is that the more experienced the founder, the better they had a chance that they will succeed. So right now, if you're a founder, you're straight out of school, you have a brilliant idea of just, you have the idea, all right, but you have no idea, no clue how to put it together and operationalize it. So I would say people just need to take their time. We need to educate the founders if they don't have the experience and so on. And you just hope and pray that they will listen, because oftentimes they know it all. They think you're trying to make life difficult for them or be unnecessarily bothersome, and so asking them to, show me your management account, show me your audited account, and it's like, this is in my head, And of course, many of them also even don't understand the fact that when you take money from somebody, you are accountable to that person for the money. Honestly, it's genuine ignorance. They don't know. And so when you start asking questions like, where are you coming from? And I know people who built successful businesses, when the investors ask questions, they say, come and take your money. They forget that without that investor's money at the outset, that business would not have taken place. So it's a question of sophistication, and so I think time will address it. Yeah.
Thank you so much for that. And really, thank you so much for these contributions. I want to open it up to the audience, but I do want to sort of emphasize some of the important things that have come out, right? One is structures for building trust, right? Two is the importance of local capital. We've talked about friends and family and all of that. As somebody who has been in the founder's seat myself, it's incredibly hard to raise, even from friends and family, and for all kinds of reasons, even when you're onto something, right? And so really making sure that local capital in the room is paying attention. I know there's lots of people here who have that 1K, that 3K, that 5K, and it's important to take those bets, but also pass on those good habits, pass on that good advice, offer coaching, offer training. I find that sometimes people are just saying no, and then they tell you to go away. They're not even offering any help. So I think that's part of how we can also do better in the room. So I want to open it up just in case there are questions that people have. Perfect. Okay, I see a question there.
All right, thank you. Thank you very much for the insightful session. So the question I have is, for startups, what are some of the exit options they have? I think, for a number of the earlier stage investors like angels and family and friends, for them, the exits would be, when the bigger funds come in and then institutions make the investments. But for a Flutterwave, MoneyPoint, and some of the other larger ones, and then for some of the mid-sized ones that may have gotten to a Series A stage, what are some of the exit options that are available? And do we increasingly have access to other capital markets, and stuff like that? And then, sorry, the second question is, for the startups that have died, I have invested in a few that have died. How could we leverage the assets that they've built over time, right? So customer lists, relationships, and stuff like that.
I can take that. So, firstly, when it comes to as an investor, I have this principle: to invest is human, to exit is divine. Because any fool can write a check. The question is, does the money come back? Otherwise, it's charity, right? And so, which is why when we go in investing, we're always asking ourselves, how do we exit? Who's going to buy this? And growing up in Nigeria, we were told, a bird in hand is worth two in the bush. When it comes to my investing career, a bird in hand is the only bird. Forget this. The one in the bush does not exist, right? And so we're always looking for how to exit. So I think the realization is this. Very few companies will make it up to the $1 billion, the money points they flutter with. And I'll come and I'll address those ones. So if you build in that in mind, knowing that your company is most likely going to be acquirable at $30 million, $50 million, which is not bad. Again, come on to Naira, right? All right. So that should also dictate how much you raise. If you're never going to become a $100 million company, you should not be raising 20 million, 30 million, because you are fully diluted. You should be capital efficient. And then you should also be temper your ego to be open to acquisition offers. Right now, we have 2 deals going on in our portfolio that we are selling to another bigger company at about $10 to $20 million. The founder still owns 60%. He will get a good payday. He would get shares in the new company, and he will learn from that bigger company. So he would have an exit on his record. He would have immediate payday. He would have a future exit, and then he can come back to the market 5 years' time to do better because he has learned. But if he does agidi, right, the company will die. And there will be no access to spread on. And that's the challenge we have because we go. A lot of these companies should be features or should be departmental leads. And they are all claiming to be CEOs so that they can update their LinkedIn. Right? And so that's the issue here. So I think we need to be comfortable with smaller exits, the 20 million, the 30 million, the 40 millions. And because it's easier for strategics to buy at that point in time. A flour mills, a co can buy you when you're still there. When you get to the $300 million, the ecosystem universe of who can buy you is very limited, right? And IPOs are they know where to be found. So you then have to ask yourself for a flutter wave, for a money point. Again, they keep growing, and Wave has the same thing, right? Hopefully they find a way of listing, or maybe there's a strategic who picks them up, but it's tough. I was in UAE recently, Abu Dhabi, and we're speaking with Chimera, one of the biggest funds. They're probably about $120 billion under management, and I was pitching a company in Nigeria to them that's close to being a unicorn. And they were interested because they had the capital. Again, they don't write checks less than $100 million, right? But the question they asked me was, how do we exit? Who's going to buy this? Let's say it does well. Let's say it overcomes the Naira stuff. And that's a question we have to start asking ourselves, right? Yes, the few ones that become those ones, where do they go? And then, but consciously start looking at how do we sell companies sub 100 million? 200 million, and find strategics that are very interested in them. I think that's the way to go. Lastly, on the point of the ones that die, how do you use them? I think it requires humility from the founders. The founders must be vulnerable enough to share what went wrong, right? The lessons learned, right? So a company is dying, we go in there and say, you know what can we save? What are the assets? What are the XYZ? A lot of time they're not open to that, right? They're fighting, they're doing all of this, and at the end of the day, you leave them, right? Because you have to spend time on the other ones. So I think it's going to also take some humility from the founders to say, I'm in trouble. Before I die, how do you save me? Someone can acquire your people. It could be your data. It could be even you yourself. And we'll find a role for you. We as investors, really as VCs, we are okay with writing off companies because we run a portfolio approach. I already assume about 60% of my companies are going to die. Just be very clear, right? It's not personal, right? But again, I want to help the ones that are going to die to, go on to other things. Either as a venture partner somewhere, either as, become part of another company or something else. But if you're not teachable, if you're not coachable, if you're not open, I won't spend the time on you because I would rather spend the time on other founders. So it's a two-way thing, but I think it's part of the ecosystem that still needs to evolve.
All right, awesome. Okay, another question.
Yeah. Good evening. Good evening, sirs. My name is Taslim Salahuddin. Run a startup that focuses on location intelligence. My question is, what's your approach towards companies that have a lot of research to do before actually going into the market? I understand that as an investor, you might judge based on growth and maybe financial growth and the likes. What if an ideal startup needed to spend at least 1 or 2 years in actual research to properly find out what they are trying, not find out, like articulate the particular solution before starting up their pre-seed? What support or what approach do you have towards this kind of startup? Thank you.
Okay.
So before I take that question, on the exit, I don't know, the Nigerian capital market is an exit strategy. You can get listed, so I don't know. That is something. No, it doesn't go. I don't get that. Well, you have entities dually listed. Seplat is dually listed in London, listed in Nigeria. I think Jumia is also. So you can approach it that way and you'll get exist. So, and the thing when you say Naira, that would actually strengthen your Naira because the more demand you have on Naira will actually elevate its valuation. So that might be your contribution to strengthening the Naira. Then with regards to, for the data part in terms of the use of, we need to be careful about GDPR and NDPR. You can't just use data you gathered on one entity without setting quote unquote permission. So we need to be careful about that too. With regards to, well, we should try to avoid analysis paralysis. You don't want to keep analyzing. Sometimes you just, let me use Nike for it, you just do it. You start, you do your MVP, and you build on that. Because if you say, oh, you have to keep doing research, you'll be there. Somebody else would use your idea and then come up. Because the same way you have that pain point that is making you want to build that solution, some other person is facing that pain point. And if you keep on analyzing, that person is going to come to you. And sometimes, first mover advantage, the person who comes in the market is the one who is seen as the innovator, and you are just the copycat. So you need to be careful on that too.
So I'll give you a politically correct answer, and I'll give you my real answer for that one. Yeah, so again, you're doing research, find investors who are, very familiar with that area, who have the long-term interest in that area, and so who can see the end of the road from where you are, even though you're not doing you're still doing the research for a short while. But in reality, if you're in Nigeria, and it's going to take you 2 to 3 years of research to get to even go and apply for a PhD. Go to Unilag, apply for a PhD, spend the 4 years doing the research. When you're ready to run a company, come back and meet us.
All right, thank you. So we can take a last question. So who wants to have the last question? Okay. Ooh. Okay, we'll take a last question and then we'll take another last question. Because I just saw somebody.
Yeah, so my name is Justice Mba. I run a frozen food distribution startup. My question is, at what point does traction get you excited? Even though the company is new and revenue is there, at what point does the traction get you really, really excited?
He was asking when.
At what point does traction get you excited? Traction. Exactly. Even though there's some revenue, what kind of traction are you looking for when you invest?
When you say traction, that's the business and so on. Depends on the stage at which you are investing. If you're investing in a startup, there's no traction. I mean, it's just an idea you're investing in. If you're investing in expansion, of course, there's history, there's growth, there's a track record that you see, and you compare that to your own understanding of what the future looks like, then you can get excited. But for, real startups in the true sense of the word, there's really no traction to talk about. It's the prospects, it's the possibilities, and so that we take a bet on.
So I have a slightly different answer. But Uncle's an angel. So again, come with me with an idea. If he's excited, he'll write a check. Today, I don't write those checks anymore. I've done those checks in the past, 150 of them, right? So today, but our check size is $1 million at entry. So we can't just put it in with an idea. So for us, we start getting excited and interested in discussing with you once you start eating $20,000 MRR monthly. That's about, how much is that? That's about 250K ARR. We start getting excited. Our sweet spot for investing right now is when you have about 500K ARR, right? That's about 40, 50K monthly, right? And growing. That's our sweet spot right now. But we're willing to take conversations when you have 20K repeatedly, because we see it's no longer a hobby, it's no longer an idea. You can differentiate yourself from the rest. And you can take a big check, and you can take, some of the support we want to do. We still have our angel vehicle still does very early, great idea. So for instance, we just backed, what's it called? Skill Ladder. right? A former Andela employee, right? Very early on, XYZ. Now that's good for our angel network. They like the founder, they understand the space. But for our fund, we'll wait until you have some reputable traction before we come in. So it varies. So that which is why you need to know who you're talking to, right? Do your homework, right? What sector does this investor invest in? What traction do they like to see? What is important to them before you go meet them? So you're not wasting each other's time.
So we'll take that last, our true last. No, okay, it's right there. So TD is here, and yes, exactly.
I was listening to the gentleman that opened the session, and one of the things he said is the undervaluation of Africa is like 2012. Okay, we're in a similar situation in terms of patterns, and within the 5, what that means essentially is Africa is currently undervalued in a comparative analysis, okay? And within the 5 to 7 year window, we expect to see that correction. Now, as investors laying out the foundation, what should we be doing?
That's a great question. I'd like everyone to give us a comment on that. That's a great question. So did everyone get the question? Yes? Okay, awesome. So
undervalued is relative in my opinion because we have population, but do we have people who can actually pay for the services that we're asking at whatever price point? So you can scale, to my mind, significantly. You can service, and it's more or less the scaling that helps you. But in terms of the unit rates, depending on your level of analysis, we don't have people who can pay $1 for a service. We're not going to lie to ourselves. And so until that is, I don't know how long that's going to take to be corrected in terms of getting people who can pay that volume. So we have to, I'm going to go beyond tech and founders, and I'm just going to normal. You can see in Nigeria, for example, I don't know if there's any country in the world where you have sachet milk or you have all these services miniaturized. And so that's the extent to which founders need to start thinking about their services, because that's the only way people can actually pay for those services, because a lot of people don't have the financial capacity to buy the services in the way you see in other markets. And so when you say we would get there, it's a growth thing. And that's why I mentioned earlier about bridging the infrastructure gap first, as well as bridging because it just helps you to accelerate and then catch up in the market. But the valuation numbers, we have population, but we don't necessarily have the capacity to pay for services that much.
Okay, so 2030, that's 5 years. So 2030 May, we are sitting here, we're all older, right? 5 years older. It's demo day 20 or whatever it is, right? What will be different in the world? I think 2 key things for us. Globally, it's AI, right? We're going to be in a very different world in 5 years' time than we were 5 years ago, right? That we're now, right? In terms of AI and the impact. Also, population-wise, Africa, again, Nigeria's population, Africa's population is going to be almost doubled, right? So what is one thing we can change is connecting these 2 things. Upskilling our people. It's talent development. If we are able to really, really focus on talent development over the next 5 years, it's going to solve a lot of the problems we are talking about. Even the issue of affordability. If our people are earning more because they're global citizens, they have been upskilled, and they feel secure still living here, they can spend more and can sell services to them, right? Again, if we have learned anything from the last 1 year of Trump and everything, we're never as comfortable anywhere as we're at home. Again, whether you're going to the Europe, whether you're going to the US, someone is going to come into presidency and come up with some rules. So again, if you can upskill our people, if you can provide security, and people stay on the continent, our population increases, but we serve the world, and our GDP goes up, our money goes up, income goes up, then you need more services, because it's associational levels. People will need more things. They will become more comfortable, achieve more things, aspire to more things, and they can sell more things, and that's how we get there. But if we don't focus on building our people, 5 years' time, we'll be talking about kidnapping, we'll talk about all the negative issues, and again, we won't be safe. So I think that's really, really one thing that I think we need to do very well.
I guess the way I would like to add is that I'm at a point in my own life when I don't look that far. But however, the point you just made is if there's one thing that keeps me excited right now, is how to turn what we call the demographic advantage of Africa into something. I've had different statistics around. By 2050, 70% of the global workforce will be African. Yeah. Now, when we talk about workforce, I'm not just talking about bodies. We're talking about skills, we're talking about knowledge. And therefore, for us to realize the potential of that possibility, we've got to make huge investment in training and skilling of our people and so on. So I would say if there is one business I will invest in today, is any business that will seek to create skilled Nigerians for the world. Chances are we probably will not be able to develop our economy fast enough to absorb all of them, but I think the world needs them, and I think we should do so. So any business, therefore, that will develop, that will train developers, coders, AI specialists, and so on, in the hundreds of thousands, and that will develop skills that will be in short supply. Care, for example, part of the reason Africa will have that advantage is that we have a young population, which conversely means that the northern hemisphere, they are old. The services they need will be more carers and nursing and so on. There's no reason why we can't be the supplier of those kind of skill sets and so on. So for that to me represents a huge business potential. So I would say that's the reason that will keep me excited. Other than that, I'm out. Thank you.
Thank you so much. Thank you very much for your questions, your contributions, and thank you, all three of you, very much. I learned a lot listening to you, and I appreciate your time coming in. I hope we all took something away from the panel, and so we'll just take photos now, and then I'll hand over to our host.
Quick photographs. Photographer would need you in front to, okay, he's here already. Thank you. Very practical session, right? Did you find it to be practical? I mean, very practical tips. Very down to earth. Thank you so much. Please, a round of applause for them. Thank you, sir. All right, we're going on to the next segment. But before that, if you had to write this session, I mean, not just this session, all that we've had so far, if it was a caption, what would your caption be? If it was a caption, say a LinkedIn caption, one sentence so far, what would it be for you? I'm coming over to somebody in blue. Sorry, don't turn away. If this was a caption, just tell me the platform. What would the caption be?
I was going to say Marie. Marie, what he said.
Oh, okay. But are you going to tell us a caption that has got a few words, like a sentence? If you were to describe this and you were writing a caption for, say, Instagram or LinkedIn, what would it be?
Hashtag accelerator Africa.
Okay. All right. Let me turn over to... Sorry, I feel like when I'm walking towards certain people, they're turning their faces away already. Please don't be angry. But if you were going to write this as a caption, what would the caption be?
I would say inspiring, impactful, and life-changing.
Ooh, I like that. Inspiring. Yes, ma'am. I've got a volunteer.
I would say a must read before you do any angel investing. A must read. If I were to write on LinkedIn. Thank you.
Please, a round of applause. I like that. A must read, because they've compressed so much into this. A must read or a must watch. All right, let me come over. If you were going to describe this, I've had 3 ladies and no gentleman. If you're going to write this as a caption, don't turn away. What's it going to be for you?
Investing in the future of Africa.
Okay, that's a simple caption. Invest in the future of Africa. All right. If this was a caption for you, what would it be? A LinkedIn caption, an Instagram caption, anything caption, what would it be? The entire day, what would you put it?
The future is right here.
The future is right here. Amazing. Good captions, good inspo. So if you're thinking of a caption for your write-up or for your video post or for your reels afterwards, feel free to use some of these captions. All right, without further ado, we're moving on to the next segment, which is a fireside chat with the Honorable Minister of Innovation, Industry, Science and Technology of Barbados, Minister Jonathan Reid. And this segment is going to be moderated by Mr. Aboyeji. A round of applause, ladies and gentlemen.
Thank you. Thank you very much. Thank you very much. It is such an honor to have the pleasure of a fireside chat with my very dear friend and the Honorable Minister for Innovation, Industry, Science and Technology for Barbados.
So we don't need to do this. Can you hear me?
Okay, yes, we can hear you perfectly. We can hear you perfectly. Fantastic. So first things first, you're welcome. Thank you very, very much for taking the time. We're very excited to have you on here. It might be helpful for people to just know where Barbados is, why it's so special, why it's different from Bahamas. Maybe that's a good place for us to start.
Well, especially because you chose that as your second residency. How about that? But no, it's the easternmost island in the Caribbean chain. So therefore, it's the closest Caribbean island to the west coast of Africa. It is formerly the home of the British Royal Navy. So it's the major site for a lot of so the home of plantation slavery and the home of a lot of the affairs that the British then used to develop colonies both here and of course in Africa. But the history that started us is not the history that has contained us. Despite the difficult beginnings, we are a space that was independent since 1966. And we have determined for ourselves that despite our small size, that we are going to be a space of focusing on abundance, a space that focuses on doing well for humanity, and a space that wants to truly punch above its weight. Punch above its weight. So we are at an interesting stage of our development, led by our Prime Minister, Mia Motley. He has had the pleasure of having numerous conversations with her and understanding what her agenda is about. But fundamentally, we see ourselves as playing a critical role in being a global hub for the advancement of really innovative startups and really dynamic entities that want to do good for themselves and good for the planet. So we have had actually a really dynamic framework that is attracting young dynamic businesses to the space with favorable tax frameworks around its IP, favorable tax frameworks as long as it's using AI in any of its production, that we actually give it this incredible tax rates and this incredible usage of business. Further to that, we are creating this sandbox where anticipation is that you'll have access to data. So once you qualify for it, that is, you'll have access to data sets, you'll have access to government infrastructure in a way that perhaps is not even available in the large spaces from which you domicile. So we're really at a point in time that despite our small size, we want to be doing incredible things for new dynamic businesses and incredible things for the world.
Fantastic, fantastic.
You did get that?
I heard everything you had said, and I think the whole room can hear you, which is a breakthrough. So we're just going to keep
cool. It's unfortunate we planned it this way because I'm surrounded by everyone in your room would want to do like the head of Invest Barbados is here, the chairman, the head of Business Barbados, the head of Export Barbados. Like everyone they would need if they came to set up in Barbados is surrounding me. So it's unfortunate that we're doing it this way.
Well, what I can promise is that by next year, we would have to do it better. I.e., everybody.
But you promised me to do it. No. You promised me it would be in Barbados. You know, you made a promise to me and you broke your promise.
Here's the warm-up conversation. I got to get all these people to know where Barbados is before we start.
100%. That's fine. That's reasonable.
Fantastic.
That's reasonable.
My other question is, Barbados has a historic role. I mean, one of the conversations that we're eager to have is where do countries like Nigeria or Africa play in the world, in this new world, right? Where old ties and old alliances are dissipating, and new alliances are necessary for playing globally in the world. How do you see, given Barbados' historical role, and given how you see the African, what do you see as the opportunity for partnership between Barbados and Nigeria and across Africa? What do those partnerships look like, especially relationships and currently? So, what do you see?
Yeah, I think the world is in a fantastic place actually. If you are innovative, I think if you wanted to keep things as in the status quo of what existed before, your world is in peril right now. But if you're someone who sees opportunities through turmoil, opportunities through a topsy-turvy world, I mean, you're at the edge of your seats. That's trying to grapple with all the opportunities coming your way. Literally, the meeting I was in, this is why we had all this grouping of people, was really around the Ministry of Foreign Affairs, Invest Barbados, Export Barbados, which falls under my ministry, Ministry of Tourism, having one kind of concise story and strategy to reach the world in this change times, whether it's tariffs or whether it's new regulations regarding migration and all those types of things. Because we're small, we see ourselves as being nimble and dynamic to meet the opportunity where it is. And that's the reference point the Prime Minister who led the meeting started the conversations around. So to go back to your original question, the reality is that Barbados is of Africa, right? So 94% of the population is of African descent. That tells you the level of connection that in a way that nothing else can, quite frankly. And you feel it when you get here. It's reflected in everything that we do. More than any other space on the planet, the majority of trips that the Prime Minister has taken for the country has been on the African continent. I don't know any head of state that is not African that has been to as many states in 7 years as the Prime Minister has been, right? Even in my capacity previously, sorry, there's a large noise coming in the background, so you can still hear me. But even in my capacity let me just get this guy.
I can hear
I
you.
had fully intended for us to be doing this meeting when I was back at my office and all this stuff, but the meeting ran 2 hours late. So you get me when you get me.
We're thankful we have you at all.
No. But as I was saying, even in my previous roles as chief of staff and advisor, I probably shouldn't say this to Nigerian, but I've been to Nigeria twice, but I went to Ghana maybe 5 times. I've been to Rwanda maybe 5 times, Kenya 3 times, Morocco, Egypt. We've been up and down the continent really establishing the potential of the relationship with a Western Hemisphere hub. And I think that's fundamental for your startups to understand that here's a space that is located in the same time zone as New York City, that is 3 hours away from Miami, that is 3 hours and 45 minutes away from New York, that is on the same time zone with a population that is extraordinarily well educated as a result of deep investment in post-secondary and universal education. And that has been well held as a place of doing international business. So major global entities from Shell to Coca-Cola to Warner Brothers host their parent accounts with us for ease of doing businesses and global taxation treaty purposes. So it's an incredible entrepot for global business entering the Western Hemisphere. So the time where, yes, the tradition is, of course, to have a Delaware-based company. Yes, the tradition is to go to the U.S. markets for those things. And there may still be benefits for that. But if you're looking for something that is a little bit more reliable in this troubled time, something that connects and understands the culture of what you're trying to do and understands you as a human being, and you want to put yourself in a position where you're doing the best work possible, but also whether you have a young family or whether you are looking to expand the business and you want to manage high quality talent not getting away from you, consider Barbados as a great space to do that from. And as E will tell you, when he spends time here, it does in no way curtail your ambitions, because the scale of what you can do just because it's a small country doesn't limit the scale of the business that you can get into, especially if you're into dynamic areas and such as fintechs. And if you're in dynamic areas of global digital services, there's no limit of where you can stretch to as a result of the size of the entity that you're in. This allows you to have a closer relationship with the regulators, a closer relationship with the governments, a closer relationship with the powers that be. So I think if you're a dynamic startup working with a small space that is ambitious, I think there's great opportunities to be had.
Fantastic. That is amazing. We're going to wrap it up with this question, Jonathan, and I just wanted people to have a teaser. Next time, I guess we'll have the whole team here, or even better, we'll be bringing Accelerate down to Barbados, which would be really cool.
No, you promised me that. So I mean, the internet gods is getting back at you for not keeping your promise, because
absolutely,
you know what I mean. That's what happens.
Absolutely. So let's get it tied up. But I wanted to end with this question. If you've been a founder, which is partly why we work so well together, and if you're a founder in this world, you're thinking about where can I build a global headquarters outside of the usual suspects, right? The UK, the US, and so on. Why would I pick Barbados? Why would I pick Barbados? And what should be the next steps? What should be the next steps that I take right after this?
So let me put it this way. I'm giving you a different answer now that I'm 42 that perhaps I would have given you when I'm 32. But I had having a personal a moment with, even though I can't see y'all, having a personal moment with y'all. He knows that I'm relentless. Like many of your founders in the crowd, go sleep for 4 or 5 hours a night maximum. I was previously a chief of staff to a prime minister, so it's 20, 30 topics a day. You're just going at the highest level. So you have to be pretty relentless to do the kind of high performance work that I have been doing for a while. And if you're not, and yesterday I was just not feeling like myself. I end up taking a midday nap, which I've not done probably in 10 years, and I woke up feeling refreshed, and it dawned on me that in all this ambitious work, if you're not highly performing as a human being and everything around you that's important as a human being, you're not going to be able to optimize the work. And I think that's, amongst everything else, that's one of the things that is core to Barbados. How do you optimize yourself as a person to be the very best of delivering the highest quality of product and end result that you're going after? So there's a space where you worry less about life, a space where that your connection to humanity and the ability to focus on having the best of you, having the best of people that are important to you, to then deliver that optimized product, service, technology, business that you're building. I think that's one thing of huge importance in a way that perhaps I didn't fully see. So I'm leaving that as one resting point with your team. Second resting point is, I think if they're in Future Africa and in your accelerator, they want to be global businesses. So yes, they're thinking about Lagos as a market. Yes, they may be thinking of West Africa or the African continent as markets. But I know your ambition, E. So you want to build businesses that are global businesses. Global businesses have to be liquid in terms of their domicile. So I think you have to understand you are going where the opportunities lie and where the market is for you to be the best version of yourself. And I think small spaces give you this opportunity to test out new ideas if a level of forgiveness that large markets just simply don't allow you to. So if you figured out something that is needle moving, and you're able to frame it out and build it out from a small space and then go back to scale in a large space, I think there's something extraordinary about that. And so we've heard the stories of, Skype out of Estonia and all the things that have been built out of Israel and all the stuff that's built out of Singapore. I think small spaces have the ability to get things to a critical mass before you go and tackle large markets in a way that sometimes, prevents small entity startups from getting to their true potential just because of the competitiveness of the space. I think there's something highly strategic about being dominant in a small space, understanding the market fit, understanding the regulators in a way that you wouldn't get to understand in a large space, and then going back to dominate large markets. And then the final point is, I just think that, there is a moment in time where and I work for her, so I'm not. This is not a. This is obviously a bit of a boast and a bit of a flex, but the reality is that we have a head of state, despite the country being small, that dominates global conversations around finance and global conversations around climate and global conversations about governance. And you're allowed to. You have the ability to crowd in global partners in a way that, as a startup, I don't think you will get the full leverage of in less large spaces, because you do not have the same relationship with powers that be that you would have in a large space. It's just the reality. And he had that experience. He's brought startups to Barbados that have the ability to speak to central bank governors and have relationships with ministries of foreign affairs and deploy services in a way that you simply would not happen as a result of being in a larger space. So I think there's ability, if you're at the right stage of your development and your product is understood and you're ready to go to your next, you're moving from 1 million maybe to the 10 million stage, go into small spaces, dominating there, understanding your product and understanding the market better, then scaling back to the large space. There's something it's not for everyone, but for the right companies, I think it could be magic.
Fantastic. I mean, fantastic. I'm so delighted that we found time to do this. I promise that next time I will not tempt the internet gods, and we'll have this conversation in person. And I hope that, for me, if I can perhaps end this panel on this note, I've spent 2.5 years being a part-time resident of Barbados.
So did you start by telling them that you're my advisor, digital economy? Did you give them the full spiel, or did you hide facts from them? What did you do?
I was waiting for you to make a public announcement.
Oh no! I was waiting for you. I was taking your lead. I didn't want to blow up your spot.
I wasn't going to expose our small secret that I part-time as your advisor on digital economy, because I do that for my minister here. I don't want him to get jealous. And he has some people in the crowd listening to us, like Francis. So I want to be careful. You're very
Mr. Bosom is my. No, Mr. Bosom is my Minister Bosom is my friend, so that's okay.
You're a very good friend, Minister Bosom.
He's my friend, so that's okay.
Like I was saying, I've spent a lot of time in this space, and if there's anywhere in the world that represents an opportunity for African startups to grow global on their own terms, without the baggage of Trump and Delaware. I can say that I'm not a public official. Without the baggage of old colonial relationships with Britain. And in a country where there's majority Black leadership that really understands what's at stake in terms of our ability to gain global respect, I definitely recommend Barbados. And I'm sure you're going to see a lot of partnerships come that way. There's a lot of stuff we can't announce now. But I'm sure that by the next time we're having this conference, we'll probably have it in Barbados, and we will probably also have a portion of it in Barbados, because we always have something in Lagos. But I'm also sure that we'll have a lot of this stuff already set up as well.
Yeah, so the reality is that I think small states don't compete in a way that large states compete, right?
Precisely.
So I think the idea of doing something that's a mini summit or a special element of Future Africa's work doesn't take away from anything that you're doing from Lagos. How could it? Because ultimately, Lagos and Nigeria is the heartbeat of the African economy. So that's not what we're trying to displace. We're trying to be a complementary platform for which, if you're thinking of building something out for the massive market opportunity that the next 20, 30, 40, 50 years of the African continent is, why not leverage a small space to crystallize your ideas, crystallize your thoughts, and start at a way that allows you to be the best fit for that large market when you're ready for it. And at the same token, I think if you just look at the GDP of small spaces, you miss the opportunity. Because the GDP of Barbados is not reflected in the fact that here's a country with 260,000 people. That really needs to be a country of really about 500, 700,000 people. And we're thinking about immigration reform, and we're going to be bringing, I should say more than thinking, we're actually bringing the parliamentary reform around that very, very shortly. So that'd be music to your ears, E.
Fantastic.
The other component to it is that if you're talking about 260,000 to 500,000 increasing your population, that's 500,000 houses, right? That's 500,000 new insurance policies, transportation, energy needs, recycling needs, services. So what the opportunity isn't dependent on what the market is now. You really should be thinking of yourself as not only reactive to a market, but building new markets.
Exactly.
And I think if you look at small markets just on what the paper size is right now or the t-shirt size is, you miss out on what the opportunity can be. And to my mind, I'm looking for builders. So what I really want out of this is ease. The 2-3 people that you tell me afterwards are hungry and ready to go, and how do we get them to Barbados and have them deployed through my ministry to do fantastic things? So that's my expectation out of you for this.
Absolutely. And you're going to see some of them once we put the videos up. People who are solving protein problems with chicken, people who are selling insurance, specialty insurance, and Barbados is one of the largest captive insurance markets in the world. People who are rethinking wealth management. So we're going to deliver all of them to you and help them grow global from Barbados in partnership with Itana here in Lagos.
Amazing. Sounds good to me.
Fantastic.
I'm ready.
Thank you so much, Minister. Let's let you go.
I'm sorry I couldn't see everyone. I'm sorry I couldn't connect.
Don't worry, we'll send you a nice picture. I promise.
Yeah.
Thank you.
I hope
Have
this
a
was
wonderful
good and
day.
everyone heard me clearly, and I hope everyone heard the eagerness of my support for E and team, Shaneri, everyone at Accelerate Africa. And I'm so passionate about, partnering with them and beyond just obviously the work that we do, and they are friends, quite frankly, and it's been very honest. And I'm just wishing everybody the best on the journey. Entrepreneurship is, kicks your ass. I don't know if I could say that on your recording, but it does. So It's not for the weak, it's not for the faint. But the level of satisfaction by moving the needle, of course, is stuff that we get up every morning to drive towards. So wishing everyone all the best of their journey.
Thank you so much. Thank you so much, Jonathan.
Thank you so much. Please, another round of applause. You know what I said earlier on about the African spirit, that we never give up. I mean, despite the network glitches, despite the tech glitches, we went on and we got a good substance out of that. So please, another round of applause for us, for everyone in here. I mean, you've been here since afternoon, some people since morning, and we'd like to say a big thank you for coming around. But to close, I'd like to invite Mr. Lukman Edu, CEO and founder of Tana. A round of applause, ladies and gentlemen.
investors, anyone trying to build for excellence here in Africa. China is building a special jurisdiction in partnership with the federal government to do that. So we're the first digital special economic zone license. We have the first digital special economic zone license in Nigeria and Africa. So we are building the first digital special economic zone. And this gives incentives to the digital and service space that typically oil and gas manufacturing receive in Nigeria. So imagine the Delaware in the US, the DIFC in Asia, in Dubai. Imagine the Estonia in Europe. Itana is the same for Africa and focus specifically on digital service, VC investors trying to come into the digital service space. We're building for Africa, starting from Nigeria. And the idea is you come to us, we help you optimize your business, unlock tax incentives, capital repatriation incentives, banking incentives, immigration incentives to help you run and build a business in Africa more easier. Through our app, you can incorporate your business, you can process your visas, you can open up a bank account, and so many other things. You get PEO services to pay your local employees, and you access the community. I remember them speaking about where you find professional services. So through the Itana app, you have vetted service providers, lawyers, business advisors, tax advisors, to help you essentially say anywhere in the world, establish a free zone business in Nigeria, with the tax, banking incentives, and get access to vendors, get access to talent, to be able to operate, so build and operate a business in Nigeria for Africa without even stepping into Nigeria. So that is us. As I said, I'll keep it short. Thank you guys for coming. It's been a long day, and I hope everyone gets home safely. Bye-bye.
All right, we cannot close without quick photographs. So I'd like to invite the founders, all the startup founders who are still here, please come on stage. The visiting partners, please come on stage. The hosts from Ian to Mia to Chinyere, please come on stage. And then Accelerate Africa staff, please come on stage. So the stage is yours for photographs. Thank you for coming, everyone. Thank you so much. There's going to be cocktail immediately after this segment. So we're transiting to cocktail. Don't be in a hurry to leave. Meet someone, meet a partner, a friend, meet a startup founder, get interested in what they offer. Please come on stage, photographs. All right, thank you so much. It's been an honor to host this event. My name is Temi Badru. All right, photographs.
To the king, I said, can you see it? I have seen it. I can see the whole world worshiping the Lord. Hey! Jesus, raised up in the sky. I said,
this is a journey into music.
Renang namo jara vishuka ufila kama hita Mandela rapakeda Unilever corporate emalema osaga gara shaka dalwe osaga gara dance man chibi jadi nyaga sama lisket skete sela sadi rap dance man cash content shanda pa ara maradona gita cash content highway shanda pa ara maradona gita hi man
DJ TY is in the mix.
Even though sometimes water no day, electricity no day. Go sing karaoke, they want to love but we they still survive.
I am your child. I'm a to do a cocoon. I'm a to me one in the bullet to watch with your shoe go. Give me a eco. The was so you book my queen Nico. Well, I go to connect, but we love us go. Echo for sure. Udi your boy echo. Let's go.
Louder. Africans.
stop, we're too hot for TV. You got to bow down when you see me. LD, do rap where I come from. My drum make y'all shake your bum bum. I do make that shit alongside. Yeah, we on some. Now they want some.
Okay, you want to go from there. I'm a solo, I'm a check up on there. You can see, me go on my back. I'm an African, coast black coffee, no sugar, no cream. One love, one stream, one team. One piece, now I big dream. Africa, nigga, yeah, you scream.
We are Africans. Louder. We are Africans. Louder. We are Africans. Come on, Africans. Yeah. We are Africans. We are Africans. Louder. We are Africans. Africans.
Time to be insistent, I'ma say it loud. Don't get it twisted, I'm black and I'm proud. I'm about my business, I'm going in now. All about my money and I got it loud. I am so African cause I rap with an accent, don't mean a damn. Lay it how you want, I can lay it as I like. Oh, song now, no be fine.
Listen to my voice. All about the world, black skin is still on song. Pass me your love, black people see me say I will. Over my nights I'm cool, wish I wanna see all I be president.
We are Africans. Louder. We are Africans. Louder. We are Africans. Come on, Africans. Yeah. We are Africans. We are Africans. Louder. We are Africans. Africans. More money. I'm an African, international African. No bones in my nose, kicks carved on my toes. New age African, young black and cocky. Like a chick so thick and chunky. Yeah, we dance the funky. It all means that we come from monkey.
Africa, I'm African, my African, let's can be taken from me. Pull out to me, rock the